Hi friends, welcome to Navkar Digital Institute, India's first virtual learning platform for professional coaching. Friends, I believe we understand the importance of RTPs, MTPs and past papers. I mean, they carry a lot of weightage. Actually, they are useful from two perspectives. Number one, it gives you an idea about trend, and specifically when you refer last 5 attempts RTPs and MTPs and past papers, you understand the trend in which the questions are going to come in your exam. And more important, after preparation, when you solve RTP, MTPs and past papers, it boosts your confidence, because RTP, MTP and past papers are the ideal papers, or rather the actual papers which have been either asked in exam or has been released by ICAI that they are something, this is something which is what they are going to ask in your exams. But you know friends, where the problem is, like they have released one of the RTP in May 18. Now when May 20 students are referring those RTPs, the point is, what about the amendments? What about the changes? What about the components which has been modified? You know, in India, a lot of faculties have released lectures of RTP May 18, but they have recorded that at that time when RTP of May 18 actually was issued by ICAI. Friends, that's where Navkar, the NDI, is taking an initiative. What we are doing is, respective RTPs and MTPs, we are amending as per the relevant attempt, and now we are in process of releasing the amended RTPs and MTPs. So today, when in June 20, I am recording the RTP, I am obviously recording RTP of May 20, but I am also recording RTP of May 18 as amended for June 20 attempt, or let's say as amended for November 20 attempt. So I hope you understand the importance of amended RTPs and MTPs, and for that you can rely only on one institute, and that is NDI, which is Navkar Digital Institute. Yes friends, we are the only one who is providing amended RTPs and MTPs for your attempt. So stay with us, stay home, stay safe and stay healthy. Thank you and God bless you.
Yes, my dear friends, come on. So friends, we are done with discussion about RTP May 2020. Now we'll start discussion about the next paper, that is our RTP November 2019. Now, before I start this discussion of RTP November 2019, friends, one thing what I want to clearly tell you guys is that I clearly told you that out of 100 marks paper, 70 marks weightage is being given for your theory questions as well as problem solving questions, and 30 marks weightage is being given for multiple choice questions. And with effect from May 2020 exam, ICAI has planned to make that multiple choice questions as case study based multiple choice questions. That point I clearly communicated to you. That is nothing but they'll give one situation and scenario, they'll give one complete case. On that complete case, they'll ask 5 multiple choice questions, and each question will have weightage of 2 marks each, and 5 into 2 becomes 10 marks. That is how they're asking a question in relation to case study based MCQ. Now, why I'm telling this point very clearly to you is that when I open now RTP of November 2019, you will not find their case study based MCQs, but you will find their independent multiple choice questions, because the idea and the concept of case study based MCQs is started only with effect from May 2020 exam. Clear, my dear friends? So when I go back and look at the old RTPs, don't be surprised, don't be confused, kindly be convinced. For a simple fact and reason that earlier, prior to May 2020 attempt, there was never a concept of case study based MCQs. MCQs were there, but they were independent multiple choice questions, but not case study based multiple choice questions. I'm sure we are clear with this point. Exactly. So we'll start looking at now RTP of November 2019 without any delay. Are we all ready, my dear friends? Speak out. Fantastic. So friends, as I told you very clearly that during the course of discussion, we'll discuss all related sections, provisions, rules, notifications, circulars, everything we'll talk whenever a particular discussion comes into the picture. Are we clear, my dear friends? So let's spend some very good time and figure out all the points in detail without any secondary thought. Are we clear? Let's start. Let me open this RTP of November 2019, my dear friends. So for November 2019 exam, this was the RTP given by ICAI. And we all know very clearly that for every attempt they're given RTP. So we just completed RTP of May 2020 and now we are looking at November 2019. After that we look at May 2019. Then we look at November 18. Then we look at May 18. And that will be the end of story for RTPs. They will also look at mock test papers as well as past exam questions. So we'll spend some good time, don't worry. Clear? Come on, let's proceed. Look at the first question, guys. Here this is not a case study based, here it's an independent questions, so definitely it will take less time for us compared to case study based MCQs. First paper of May 2020 took so much time for us because there was too much of depth involved in every case study. But now that we do not have case study based multiple choice questions, but since that we have got independent multiple choice questions, it will not take much time for us. So time taking will definitely be less as compared to the previous paper. Clear? Come on, let's proceed. State whether following statements are true or false. I repeat one more time. State whether following statements are true or false with respect to provisions or relating to advance ruling. Very good. First, questions on which advance ruling can be sought under this act. I repeat one more time. See what is the question, my dear friends? Questions on which advance ruling can be sought under this act include rate of tax applicable to particular supply and as well as place of supply. Friends, 100% this statement is false, my dear friends. Let me tell you reason also why. Because in exam, for multiple choice questions, you will not write the reason. Straight away you will give the answer for multiple choice question. You will just circle what is the correct answer. But ultimately, whatever you circle, you should know how you derive that answer. I totally accept the fact that there is no negative marking, but all said and done, even though there is no negative marking, it is your utmost duty to have a great sense of clarity of thought on how you got that answer. That's very important. Now here let me tell you why this concept is false. Sir, if I go back to the discussion, my dear friends, when I talk about this word called advance ruling, let me tell you very clearly that the concept of advance ruling is dealt from section 95 to section 106. There are various sections which deals with the concept of advance ruling, and in that one brilliant point what you should have clarity of thought is very clearly, my dear friends. Section 96 talks about AAR, that is authority for advance ruling, is constituted under SGST Act. Otherwise, advance ruling authority is not a central level authority. Advance ruling authority is only a state level authority. Now, one point very clearly is that section 97 talks about what are the questions we can raise before advance ruling. In that they clearly told we can go and ask questions on time of supply, value of supply, applicability of a notification, determination of rate of tax, availability of input tax credit, whether a particular person is required to get registered or not, or whether a particular transaction amounts to supply or not. Like this, we can go and ask any type of questions before advance ruling, but we cannot go to them and ask a question related to place of supply. I repeat one more time, we cannot go to them and ask a question related to place of supply. And the logic is very clear for that, because advance ruling authority, otherwise authority for advance ruling, AAR, is a state level authority. How can we go to a state level authority and ask a question related to place of supply? We cannot go to a state level authority and ask a question related to place of supply. That's very interesting and very fundamental, and I strongly believe that this point makes sense for everybody. Said we cannot go to a state level authority and ask a question related to place of supply. I strongly believe that this point makes sense for all of you, sir. One more time I repeat, we cannot go to a state level authority and ask a question related to place of supply, because place of supply provisions are given by IGST Act. And based on place of supply, which state you tell place of supply, that state will get the revenue, because GST is a destination based consumption tax. So we really cannot go to a state level authority and ask a question related to place of supply. Such a very interesting and wonderful point, my dear friends. And I strongly believe that this point makes sense for all of us, sir. Fantastic. Let me proceed. So going back to the question, this is false because we cannot ask a question related to place of supply. Second, rectification of advance ruling is not possible once the authority for advance ruling has passed the order. Ridiculous. 100% this statement also is false, because we have got one wonderful section called section 102, which very clearly says that whenever AAR, AAR passes the order, when I say AAR, appellate authority for advance ruling authority or appellate authority for advance ruling, these guys, whenever they pass order and if there is a mistake apparent from record in the order passed by them, they have got complete power with them to rectify that mistake apparent from record. So no doubt about it. Getting clarity, friends? Next, third, authority for advance ruling shall pronounce its ruling. I repeat one more time. They shall pronounce its ruling within 90 days from the date of receipt of application. 100% this statement is true, my dear friends. The reason being very clear that we have got one section called section 98, which talks about procedure on receipt of application for advance ruling, which clearly says that authority for advance ruling will pass the ruling within 90 days if possible. Very, very interesting point. That is why my answer is true for this. Fourth bit. If you observe, in one multiple choice questions, they cover so many concepts. Correct or not? Exactly. Next. So that's why I don't underestimate multiple choice question. That's where I clearly told one point. Multiple choice questions are not something what you will mug up based on the number and quantity of 500 MCQs, 1000 MCQs and go and write in the exam. It won't work like that. You require some greatest amount of clarity of thought on the concepts, then only you can answer any multiple choice question. Clear? See now. Authority for advance ruling. I repeat one more time. Authority for what's a advance ruling may accept the application even if question raised in the application is already pending, pending or decided in any proceedings under any of the provisions of CGST Act qua the applicant. 101% this statement is also false, my dear friends. The reason being very clear that one important point and the most important point they told in advance ruling chapter is that advance ruling authority will not accept the application. I repeat one more time. Advance ruling authority will not accept the application if the question raised in the application is already pending or decided in any proceedings. When the question is already pending somewhere else in another proceedings, or if question is already decided, why do you want to come to advance ruling and again ask that same question? That is where they clearly told that advance ruling authority will not entertain the application on a question which is already pending or decided in any proceedings in the case of the applicant. Getting clarity, friends? Sure. Finally, last point we have got, that also we'll talk. Fifth bit. So 5 concepts they covered indirectly. See now. Authority for advance ruling may by order declare such advance ruling void ab initio. What is void ab initio? Void right from beginning. If it finds out that such ruling is obtained, come on, see now. Such ruling is obtained by suppression of material facts, fraud or misrepresentation of facts. Let me tell you, 101% this statement is true, my dear friends, because we have got one wonderful section called 104 of CGST Act, which clearly says that advance ruling authority, they have got power to declare the ruling as void if the ruling is obtained by way of fraud or misrepresentation or suppression of facts. They have got utmost power with them to declare the ruling as void if the ruling is obtained by way of fraud or misrepresentation of facts or suppression of facts. So if you observe carefully, what is that options we have got? False, false, true, false, true, false, true, true, false, false, whatever it is. Let's go by our answer. Come on. False, false, true, false, true. False, false, true, false, true. So 101% my answer is option A. Getting clarity, friends? Looks like very simple, but still very powerful. There is so much of concept involved. And if you don't know one point, then gone. Multiple choice question is gone. Sir, multiple choice questions are those kind of question where it is 100% scoring is possible. And at the same time, 100% losing marks also is possible. So both are there in relation to multiple choice questions. So it is our utmost duty to make sure that we have got some great amount of clarity of thought on the concepts, not multiple choice questions, on the concepts. And if you are perfect in concepts, 101% you can answer these questions in a beautiful manner. Make sense? Wonderful. Moving forward. Second question. See now. Lex Corp Private Limited is a registered manufacturer of what, my dear friends? Fruit juices. I repeat one more time. He is a registered manufacturer of fruit juices. It purchases plastic bottles and cardboard. They purchase some plastic bottles and cardboard and sends the same for affixing stickers on the plastic bottles and manufacturing boxes from cardboards to a registered job worker. Very good. Generally, my dear friends, what happens is that there is somebody called principal. Principal will send some materials to someone known as job worker. And this job worker, what he will basically do is that he will manufacture finished goods. Now what will he do with that finished good? Generally he will send back that finished goods to the principal, or principal might tell job worker, principal might instruct job worker telling that these goods, finished goods, whatever you manufactured, supply to a particular person. So logic point is very clear that whenever job worker manufacture finished goods, that finished goods are returned back to the principal, or that finished goods are further supplied by job worker on the instructions of principal. Make sense, right? See now, Lex Corp Private Limited is a registered manufacturer of fruit juices. It purchases plastic bottles, cardboards, and sends the same for affixing stickers on plastic bottles and manufacturing boxes from cardboards to a registered job worker. Please observe that word. He is a registered job worker. Very good. Hammer Industries Private Limited, that is a person job worker company name. These raw materials are sent directly from place of business of supplier to premises of job worker. Very good. Place of business of supplier to premises of who, my dear friends? Job worker. Fantastic. Lex Corp booked input tax credit on purchase of such items. Very good. Nothing wrong also, because we have got one wonderful section called Section 19, which clearly says that even though some goods or some raw materials or some capital goods are directly sent by supplier to job worker, principal can still take input tax credit. Because one point, let me clearly tell you, my dear friends, we have got one section called Section 16, which talks about eligibility and conditions to claim input tax credit. Eligibility and conditions to claim input tax credit. In that first point says, recipient must have tax paying document. Point number 2, recipient must receive goods or services or both. Point number 3, supplier must pay tax to government. Point number 4, recipient must file return under Section 39. So friends, what is second point there? Second point is nothing but recipient must receive goods or services or both. However, what they told is that in case of build to ship to model, that is, goods are built to one person or services are built to one person and shipped to another person, still this particular recipient can take input tax credit. Now what does that mean? There is somebody called Shiva Teja. Sir, there is somebody called Shiva Teja. I called one person in Delhi and I ordered some goods. But I told him, boss, don't send the goods to me. Send the goods to one of my friend in Bangalore or Bengaluru. I called a person in Delhi and ordered some goods and told him, please don't send the goods to me. Send the goods directly to my friend in Bengaluru. Now my question to you straight away is that bill will be on whose name? Bill will be on the name of Shiva Teja. But where are goods sent to? Goods sent to Bengaluru. That is why it is technically called as bill to ship to model, wherein the goods are built to one person and shipped to another person. Strictly speaking, the goods physically did not come to my hand. That goods physically did not come to my hand. Still Shiva Teja can claim input tax credit, because law clearly told one fantastic point that is very beautiful and very amazing. where they told very clearly that recipient can claim input tax credit even though, otherwise principal can claim input tax credit even though goods are sent directly to job worker. Getting clarity, friends? Come on, let's look at what is the question they are asking. Following transactions took place in this regard. Let's look at that. Come on, see now. Value of goods sent to job worker, 50,000, 2 lakhs, 8 lakhs, 10 lakhs, 3,50,000, on which input tax paid on such goods is something like this. And date of purchase of goods by Lex, the dates are also given. Very good. Date of receipt of goods by Hammer, those dates are also given. Fantastic. So they gave details of when Lex purchased, and they also gave details of when Hammer Industries received that goods. Finally, date of goods received back from Hammer, those are also given. Sir, they are asking one very interesting question. See now. Determine total amount to be added to the, what's that? Total amount to be added to the output tax liability of Lex Corp Private Limited in case of violation under section 143 of CGST Act. Ignore different point of times when the amount is added to output tax liability. Very good. Sir, one point let me very clearly tell you. That is something like this. That 143 clearly talks about procedure for job work, which clearly says that whenever goods are sent by principal to job worker, I repeat one more time, whenever goods are sent by principal to job worker, law told one fantastic point. The fantastic point what they told is something like this. That is, listen very carefully. The inputs sent to job worker should come back or should be further supplied within a time limit of 1 year. Input sent by principal to job worker should come back within a time limit of 1 year. That means within a time limit of 1 year, either it should come back or it should be further supplied. But the time limit is not 1 year, time limit is 3 years in case of capital goods. Correct, my dear friends? But here, in this particular question, if you observe, they never use the word called capital goods. So we'll treat it as inputs only. Clear? So what is the time limit? 1 year. Now from when will you calculate 1 year? 1 year generally we calculate from when principal has sent to job worker. Correct? But in this particular question, if you observe, principal has not sent to job worker, but job worker directly received from supplier. So we will see the date of receipt of goods by Hammer. So if you see from this date, 15th July 2017, we have sent, and they came back on 12th July 2018. So fantastic. So there is no problem. 15th July we have sent, to 12th July it has come back. So that is within 1 year. So not a problem at all. Next, 27th September we have sent, but 13th October of next year it has come back. So definitely there is a problem. Correct, my dear friends? So what is that value, my dear friends? Let me use one different color so that you will highlight that. So this 24,000 whatever credit you have availed will be added to the output tax liability because there is a violation. And the violation is clearly in the nature of that inputs did not come back within 1 year. And 1 year in this case, we will see from receipt of goods by Hammer because they are directly received by job worker from supplier. Generally what we do is, we will see the date when principal has sent to job worker. But here, job worker, principal has not sent to job worker. But if you observe clearly, these raw materials are sent directly from place of business of supplier to premises of job worker. That is the reason why we are looking at when Hammer Industries Limited has received that. From there we are calculating 1 year. Clear? Next. 25th July. Very good. 25th July, what is 25th December, sorry. 25th December we have sent. 16th August, that too when? 16th August is 2019, sir. 16th August is 2019. Please observe that, my dear friends. Very, very clearly, please observe. Sir, please observe very clearly. What they have sent is basically it purchases plastic bottles and cardboards and sends the same for affixing stickers on the plastic bottles and manufacturing boxes from cardboards. So it's very clearly is a raw material or inputs. It's not a capital good. So time limit is only 1 year. Now see here, 25th December we have sent, 25th December we have sent, and when it has come back, my dear friends, 16th August, but it is 2019. So clear cut, there is a violation. So this amount also we'll add it to the output tax liability. Next one, 1,20,000, and that receipt of goods is 25th January 2018 and received back on 23rd January 2019. That means clearly there is no violation. They are received back within 1 year. So no problem. Finally, last one, 26th February 2018, they have received it and they are received back from Hammer on 28th February 2019. That means here also there is a violation. Here also there is a violation. Correct, my dear friends? And what is that amount involved? 42,000. Correct? 24,000 plus 96,000 plus 42,000. So what is the figure coming to? 24, 96 and 42. 24, 96, 42. It comes to 1,62,000. So if you see options, first one is wrong, second one also wrong, third one is also wrong because it is 1,62,000. We will pay interest always at the rate of 18%. That's what they clearly told in the law. Interest is not 24%, interest is 18% only. That is the reason why answer is not option C, answer is option D, my dear friends. Getting clarity, sir? Speak out. Small point but very powerful point. If you observe, this all concept is given based on section 19, read with one section called 143. And to give you more clarity of thought, we have got one rule called Rule 45, which talks about conditions and restrictions related to job work. In that law clearly told one point that whenever principal is sending some goods to job worker and they are received back from job worker, we report in one form called ITC 04, which we file it on a quarterly basis. In that we clearly report when are the goods sent by principal to job worker and when are those received back from job worker. By disclosing that details, what will happen is very clearly that the details are reported by principal when he is sending to job worker and also when they are received back from job worker, by which government is tracking very clearly when the goods are sent and when the goods are received back. Getting clarity, friends? Something super duper interesting and super duper wonderful, sir, which actually makes a lot of sense. And I strongly believe that we have got full clarity on this point. Speak out, sir. Fantastic. A very, very interesting question actually, which has got a lot of meaningful sense. Clear? See now, next. Third bit. See now, my dear friends, let's look at the third bit. See now. Rahul Roy. Come on, what is the person name? Mr. Rahul Roy, proprietor of Royal Shoe and Company, is running a business of manufacturing shoes with the brand name of Junoon. Wow, what a crazy brand name. The manufacturing unit is located in Delhi and registered under GST. However, due to low profitability in the business, he decided to transfer his business to his friend, Mr. Dilip Tijori. And Mr. Dilip Tijori is already running business of manufacturing shoes under a proprietorship firm. What is that name? Hawaii Shoes and Company, which is located in Mumbai and registered under GST. Mr. Rahul Roy has approached you to help him with the issue of transfer of unutilized input tax credit in his electronic credit ledger of Royal Shoe Company to Hawaii Shoes Company. Let me tell you very clearly one wonderful point, my dear friends. For this particular scenario, we have got one wonderful section called section 18.3. I repeat one more time, we have got a brilliant section called section 18.3, my dear friends. And 18.3 clearly talks about something called in case where, I repeat one more time, 18.3 clearly talks about something called in case where there is a merger or amalgamation or a demerger or lease or transfer of business, then the unutilized input tax credit lying in the earlier entity can be transferred to the new entity. And for this purpose, we have got one practical form, that is one form called ITC02. This is the form what we will file for the purpose of transfer of unutilized credit. And in fact, this concept is clearly given by one rule called Rule 41, which clearly says that submit this form called ITC02, then the credit line will get transferred. As simple as it. Clear? So now, advise Mr. Rahul Roy with the correct option in accordance with provisions of CGST Act. Very good. For the first point, Royal Shoe and Company cannot transfer unutilized input tax credit in his electronic credit ledger to Hawaii Shoes and Company as proprietors are different. Nonsense. This is 100% wrong option. Who told they cannot transfer? 100% they can transfer. David. Royal Shoe and Company can transfer unutilized input tax credit in its electronic credit ledger to Hawaii Shoes and Company, and it can be further be utilized in setting of GST liability for succeeding period. Fantastic. This is in fact the perfect option. But still, let me read out other options also. Royal Shoe and Company can transfer unutilized credit in its electronic credit ledger to Hawaii Shoes and Company, and it can be further utilized in setting of GST liability for a period up to the month of September. Like that, they never told in the law. They never kept time limit for utilization of transfer of credit like this. They only told you can utilize for subsequent period. That's it. Getting clarity? Next. D option. Royal Shoe and Company. Let me look at that. Come on, my dear friends. What is the D option? Royal Shoe and Company cannot transfer unutilized credit, but can claim a refund of such unutilized credit. Nonsense. So definitely my answer is option B, that they can transfer unutilized credit in electronic credit ledger to Hawaii Shoes and Company, and it can further be utilized in setting of GST liability for succeeding period. Such a fantastic point actually. I'm sure we got this clarity, my dear friends. And this all story is actually given by which section? This all story is given by one wonderful section called section 18.3, my dear friends. Are we clear? Everybody, sir? Fantastic. So what is the answer, my dear friends? Answer is option B, sir. Clear? In exam, you need not give right explanation. You will straight away right answer. But it is very important that you have a great amount of clarity of thought on how you got that answer. That is the reason why I am so concerned and focused, so as to make sure that you have a reason for the answer what you have given. Clear, sir? That's it. That is the story of third question, and the answer is option B. Clear? Let's look at next question, question number 4. An appeal to High Court can be filed in following cases. See now, by a person agreed against order passed by state bench or area bench of appellate tribunal, 100% perfect. Second, by a person agreed against order passed by national bench or regional bench of tribunal. Sir, this answer is wrong. 100% this answer is wrong. Why? I'll tell you. Listen, my dear friends. So whenever we talk about appeal, kindly please listen. When we talk about appeal, whenever an order is passed by adjudicating authority, an order is passed by whom, sir? Adjudicating authority, we will go and file appeal before somebody called appellate authority. What authority, my dear friends? Appellate authority. And after appellate authority gives order, if you are not happy, we will go and file before appellate tribunal, my dear friends. We will go and file before what, sir? Appellate tribunal. But in appellate tribunal, there are two types of benches called national or regional bench. National or regional bench. Other side, there is something called state or area bench. Now, one point you have to understand is that when do we go to national bench or regional bench? When do we go to state bench or area bench? Let me tell you very clearly, we will go to national bench or regional bench only when there is any matter related to place of supply. Other words, if the order involves a matter related to place of supply, we will not go and file appeal before state bench or area bench, but we will go and file appeal before national bench or regional bench. And very clearly, that's a very logical point. How can we go to a state level bench and ask the question related to place of supply? That is where we go to what bench, my dear friends? National bench or regional bench, when you have got some question related to place of supply. And if there is no place of supply matter, then only we go to state bench or area bench. Now, interesting point is that after state bench or area bench passed order, we will go and file appeal before High Court. And in High Court, if you are not happy, we will go and file appeal before Supreme Court. I'm sure this line makes sense for everybody. But one point to clarify you very clearly is that if an order is passed by national bench or regional bench, then we will not file appeal before High Court. Directly we will go and file appeal before Supreme Court. Very logical point. Why logic is very clear that when you went to national bench or when you went to regional bench, why will you come back and again file an appeal before High Court? You already went to national bench or regional bench. Then from there, we will not go and file appeal before High Court, but directly we will go and file appeal before Supreme Court. So what line I want to tell you is that an appeal against order of national bench or regional bench can be filed before Supreme Court, but not High Court. Getting clarity, friends? If you want, I'll just wait for you for 1 minute. You can take this chart. Very helpful, very easy, and very important chart. And it actually makes a lot of sense. I'm sure very, very clear with this point also. Extremely important, my dear friends, which actually makes a lot of sense and super duper amazing and super duper important. So first, who passed the order? An order is passed by adjudicating authority. After that, we will go and file appeal before appellate authority. Then we will go and file appeal before tribunal. And in tribunal, there is something called national bench or regional bench. Other side, there is something called state bench or area bench. And if an order is passed by national bench or regional bench, we will go and file appeal before Supreme Court directly. But if an order is passed by state bench or area bench, we will go and file appeal before High Court. And after High Court only, we will go to Supreme Court. And an important point to be noted is, when do we go to national bench or regional bench? Whenever an order is passed by appellate authority and we want to file an appeal and there is any matter related to place of supply, then only we will go and file appeal before national bench or regional bench. I strongly believe that we have got great amount of clarity of thought on this concept, my dear friends. Speak out. Very good, very interesting, very important, and a fantastic concept, my dear friends. I'll just wait for 1 minute. Whoever is interested to take this chart, they can take this chart. So can I proceed and move forward, my dear friends? Yes, exactly. I'm sure we are ready. Yes, come on. Let me move forward. So going back to the question, first option was what? First bit was what? By a person aggrieved against order of state bench or area bench. That is perfect. Second, by a person aggrieved against order passed by national bench or regional bench. That is pakka wrong. Because after national bench or regional bench, we'll directly go to Supreme Court. Next, for matter involving substantial question of law, obviously, we will go obviously for matter related to substantial question of law. Correct? Then all of the above is obviously wrong because second one is wrong. So first one, third one, both are correct. Choose the correct option. 192, this is wrong. 193, this is perfect. This is also wrong. This is also wrong. Answer is option B. So if you observe, third one also was option B. Fourth one also is option B. But some students, without having a clarity of thought, they are just like that, trying to select options B, A, C, D, D, B, A, C, Let they are selecting all options because they are thinking that since anyways there is no negative marking, out of 10 questions, at least 3-4 might be correct. But there is a high possibility all 10 what you selected randomly might end up being completely wrong. So please don't select your options like that. Have a clarity of thought on concepts. Any multiple choice questions you can answer. Be sure and be perfect on the concepts. That's important. And if you're perfect on concept, then any multiple choice questions is a very simple task for you. That's a point and that's a Bible, that is a principle what Shiva Teja will always follow. And I really want my students also to follow that. Are we clear? Can I proceed and move forward? That's it. That's the end of story for question number 4. Now I'm looking at something called now question number 5, my dear friends. Come on, let's look at that. See that, my dear friends. Question number 5. Reena Banerjee. Very good. Miss Reena Banerjee is engaged in retail business of selling mobile phones in the state of West Bengal. Very good. She has effected supplies to customer in the state of UP and Haryana. Her total turnover during the financial year ending 31st March is coming to 18 lakhs. Owing to low profit margin in the business, she has decided to shut down the business. Proper officer has collected evidences of interstate sale of mobile phones effected by Reena Banerjee during the financial year ending 31st March. Now proper officer wants to make assessment as she was liable for registration but she did not get herself registered. You are required to assist proper officer by determining which assessment can be made. Wow, a small question actually, but very simple and easy. But you should have clarity of thought. Now what is the point? Let me very clearly tell you. Sir, first of all, we have got one section called section 24 which talks about compulsory registration. But before that, we have got something called section 22 which talks about persons liable for registration. 22 clearly says any person is liable to be registered if his aggregate turnover exceeds 10 lakhs or 20 lakhs or 40 lakhs as the case may be. In different case we have got different limits, but generally it is 20 lakhs. Clear? But now one point very clearly I want to tell you is that section 24 talks about compulsory registration, where registration is mandatory irrespective of turnover. That means irrespective of whatever is your turnover, registration is still mandatory, and that point is clearly given by section 24 in that first point, which is extremely important and very wonderful point. What that point says is that any person engaged in interstate taxable supply of goods, if any person is engaged in interstate taxable supply of goods, except one exception is given for handicraft goods, that is different, but in general any person engaged in interstate taxable supply of goods, for him registration is mandatory irrespective of aggregate turnover. That means whatever is his aggregate turnover, still he should get registration done. And who is that he? When I say he, I am talking about somebody called what, my dear friends? What is it I am talking about? Any person engaged in interstate taxable supply of goods, for him registration is mandatory irrespective of turnover. And one important point is that we have got one great section called section 62 which talks about best judgment assessment, which clearly says that if any person who is liable to be registered but do not obtain registration, then proper officer will proceed and do something called best judgment assessment. As the name only says, it is best judgment assessment. That is, assessment is done to the best of his judgment, and generally they pass that BJI order within 5 years from the due date of filing annual return for the financial year to which it pertains. Getting clarity, friends? Very interesting and important concept. So in this particular question, what they asked is that you are required to assist the proper officer by determining which assessment can be done. Self-assessment, obviously no. Self-assessment, obviously no. Provisional assessment, obviously no. I'm searching for assessment of unregistered person, and this concept is given by section 62, which is also called as BJA, Best Judgment Assessment. I'm sure we are getting clarity, friends. Special assessment, there is nothing like that. So answer is option C. So fifth question answer is option C, my dear friends. I strongly believe that we are getting full clarity on these points. So if you observe very clearly, I'm not just trying to tell you straight away this is the answer. I'm also trying to tell you when this is the answer, why this is the answer. That is what is very important. You should definitely have a great clarity of thought why this particular option is the answer. Then only you are master in subject, my dear friends. Getting clarity, sir? Very good. Can I proceed now? Let's proceed. See now. Next question. Furry Limited has received an order for supply of services amounting to what, my dear friends? $5 lakh from a US based client. Very good. They have got an order for $5 lakh from US based client. Fantastic. Sir, look at that. Which question we are looking at? Sixth question we are looking at, my dear friends. Come on, see now. $5 lakh from US based client. Furry Limited is unable to supply the entire service from India and asks NIAC Inc. Mexico, who is not an establishment of Furry Limited, to supply a part of services, that is 40% of total contract value to US client. Furry Limited has raised invoice for the entire value of $5 lakh, but US client has paid $3 lakh to Furry Limited and $2 lakh directly to NIAC Inc. Mexico, which is approved by special order of RBI. Furry Limited also paid IGST at the rate of 18% on services imported from NIAC Inc. Mexico, assuming that all conditions of section 26 of IGST Act are fulfilled, determine the value of export of service. Fantastic point. In fact, my dear friends, when we talk about valuation, there is something like this. What is that? Let me very clearly tell you. That is, there is one section called section 15(2)(b), which says very clearly that 15(2)(b) language is very clear, which talks about supplier's obligation in relation to supply. Supplier's obligation in relation to supply is met by recipient. Supplier's obligation in relation to supply is met by whom, my dear friends? Recipient. Now I'll ask you one straight fundamental question, my dear friends. Think properly and tell me the answer. Furry Limited, they have got order for supply of service amounting to what value? They have got order for 5 lakh rupees. But the only thing what Furry has done is that since they could not give entire service, they asked somebody called NIAC Inc. to provide 40% service value. That is nothing but 2 lakh rupees. However, if you observe, Furry Limited raised invoice for what value? For the entire value of $5 lakh. When for entire value of $5 lakh invoice is raised, very clearly, my dear friends, even though the US based client has paid $2 lakh to NIAC Inc. and $3 lakh to Furry Inc., then value of supply for export will be entire $5 lakh only, but not $3 lakh. That is because supplier's obligation in relation to supply is met by recipient will be definitely included in the value of supply. So if you see here, what will happen very clearly is that $5 lakh will become value of supply. So for sixth question, answer is option B, my dear friends, and there is a logical reason why answer is option B. And I strongly believe that we have got great clarity of thought on why the answer is option B, sir. Speak out, my dear friends. Very interesting, very important, which actually makes a lot of sense, my dear friends. Are we clear? Very good. Next. Question number 7, sir. Look at that, come on. Question number 7. Brilliant, interesting. What is that? Mr. Khiladi Kumar. What a great name, guys. Mr. What Kumar? Khiladi Kumar. This question we're talking, come on. Question number 7. See that. Khiladi Kumar is the managing director of Khiladi Equipments Private Limited. Great language. Company has offices and factories in Mumbai and registered under GST. Very good. Company has decided to send food grains and other relief materials worth 50 lakhs and 20 lakhs respectively through railways and also airways to cyclone hit victims in Kerala. So sweet of them, so nice of them. Company has contacted Super Airlines and also, what my difference, Indian Railways to transport the materials from Mumbai to Kerala, and the price for the same has been determined as 10 lakhs. That means 10 lakhs is the transport value. That means freight charges, and 50,000 by railways. 10 lakhs by air, 50,000 by railways. Now you see here, Mr. Khiladi Kumar seeks your help in determining what amount of GST is to be paid by Super Airlines and Indian Railways. Very, very interesting question actually. And for this, let me very clearly tell you that answer is that in case of service by way of transportation of goods by rail, that too when we talk about relief materials or any food grains, if they are transported by rail, then it is straight away exempt under GST law. In case of transportation by rail, we have got exemption given by the law, which clearly says that in case of relief materials given or relief materials transported for victims, service given by Indian Railways, otherwise transportation by rail, that will straight away become exempt. But exemption is given is only for rail but not for air. So if you observe carefully, Indian Railways will be exempt, whereas in case of air, it will definitely become taxable. So air, what is the value of service? Value of service is 10 lakh rupees. GST is 18%. 10 lakh into 18% comes to 1,80,000. So 1,80,000 for airlines, and for Indian Railways, it will become nil because transportation of relief materials for victims by rail is straight away exempt under GST law. So if you observe, answer is option A. Without any second thought, answer is option A, because Super Airlines is 1,80,000 and Indian Railways is straight away nil. That is the reason why my answer is option A. I strongly believe that we are getting full clarity on this point. Small concepts but very interesting and very powerful, my dear friends, which actually makes a lot of sense, and I strongly believe that we have got full clarity on this point. Clear, sir? This question is purely based on exemptions chapter. Clear? That is where, my dear friends, when you learn exemption chapter, one point you have to very clearly understand is that exemptions are not something what you will straight away mug up all 80-90 points. So one thing which I am sure very clearly you guys know is that under GST law, we have got so many goods which are exempt, and we have got a lot of services which are exempt. And under GST law, in your syllabus, you do not have list of exempted goods, but you do have list of exempted services that you definitely need to learn. The list of exempted services, on that no compromise. Clear, my dear friends? In that list of exempted services, one such point is this point, which clearly says that transportation of relief materials by rail is straight away exempt under GST law. Are we clear? See next point. Question number 8, my dear friends. See now. For the purpose of Rule 7, deductive value of customs, we have moved to customs now. 7 questions were on GST. Next questions are on customs. Determination of value of imported goods rules 2007. Determine the unit price in greatest aggregate quantity. Very good. A Limited makes 2 sales. In the first sale, 500 units are sold at a price of 95. In the second sale, 400 units are sold at a price of 100. Sir, one point let me clearly tell you, sir. That is, whenever we talk about valuation under customs, we always look at some value called transaction value. But lot of times it might so happen that this transaction value may not be acceptable, and if the transaction value is not acceptable, we have got some further rules. For example, we have got some rule called Rule 4, which clearly says look at the value of identical goods. And there is something called Rule 5, which says look at the value of similar goods. If identical goods is not possible, look at similar goods. And Rule 6 says if Rule 3, 4, 5 is not possible, then look at something called Rule 7. And Rule 7 talks about one method called deductive value method. Deductive value method is something like whenever we imported, that imported goods obviously we will resell. When we resell, at what value we will resell, that value we are going to take. But one point is very clear that we will not resell all the goods at same price. We will resell the different goods, we will resell the same goods at different prices based on the demand in the market. So what they told in the law in Rule 7 very clearly is that deductive value means we will see the price at which greatest aggregate quantity is sold. So more quantity is sold for what price, that value will take into account. So if you observe 500 units are sold for what price? 95 rupees we sold. And 400 units we sold at what price, my dear friends? We sold at a price of 100 rupees. So if you observe more quantity, I repeat one more time, more quantity, otherwise greatest aggregate quantity, we sold at what price? We sold at a price of 95 rupees. So straight away in this particular case, my answer will work out to 95 rupees, my dear friends. Very clearly, my answer will work out to 95 rupees for a simple fact and reason, that is nothing but 500 units are sold at 95, 400 units are sold at 100. We are not going to follow the nonsense concept of average and all. But what we tell is that more quantity we sold at what price, that price will be considered. So in this particular case, my answer is straight away 95, my dear friends. Very interesting and very important, which actually makes a lot of sense, my dear friends. And I strongly believe that we have got great amount of clarity of thought on this concepts, my dear friends, which are extremely important and very wonderful. Are we clear, sir? Speak up, my dear friends. Everybody, sir? Chal, without any second thought, let me proceed to next question, my dear friends. That is, we're talking about something called question number 9. See now, when I talk about question number 9, my dear friends, please see now, which of the following combination is correct? Very good. Goods pilfered. So whenever there is a pilferage means nothing but goods are lost in small quantities. That is technically called as pilferage. Whenever we talk about pilferage, in pilferage what we always do is something like this. Pilferage, we will never pay any duty. There is no liability of duty in case of pilferage, my dear friends. Second, next point. Goods what, sir? Goods what? Lost or destroyed. Goods lost or destroyed. Let me tell you, in case of goods lost or destroyed, we will ask for something called remission of duty. Remission of duty is something like complete waiver of duty. And in case of goods damaged or deteriorated, we will ask for something called abatement of duty. Abatement of duty is something like partial exemption. And in this context, to give you clarity, let me tell you, pilferage concept is dealt by section 13. Abatement of duty is dealt by section 22. Whereas remission of duty is dealt by section 23. Because section 23 talks about remission of duty on goods lost or destroyed or abandoned. But in case of goods damaged or deteriorated, we will seek something called abatement of duty. And in case of goods pilfered, we will say something called we will not pay any duty. Clear, my dear friends? And this concept is given by customs law. Whatever section numbers I wrote there are all of Customs Act 1962. So answer is what? 1 to 2, 2 to 3, 3 to 1. Exactly. Let me check where is my option. A is wrong, B is also wrong, C is 100% perfect. So my answer is option C. So for 9th question, the answer is option C, my dear friends. Ultimately, what you have to understand is, if you have clarity of thought on the subject and the concept and the provision, any question you can answer. And multiple choice, straight away 10 questions will come like this. Of course, 3 marks each. It used to come like this, but from now onwards, it's going to be case study based multiple choice question. So if you are clear on concept, any multiple choice question you can answer. Clear, my dear friends? Next, let me look at the last multiple choice question. That is question number 10, my dear friends. Question number 10. Let's see now. Which of the following statement is not correct? We are talking about which is not correct. Which is not correct means what? We are talking about what is false. Correct? In relation to drawback under section 75, 74 and 75. See now. First point. While drawback under 74 is payable when duty paid goods are re-exported, fantastic. Drawback under 75 is payable when imported goods are used in manufacture of export goods. 100% this is perfect answer. Perfect answer. That means the statement is a correct statement. Then, while rates for drawback under 74 are fixed, manufacturer may seek a special rate for drawback under 75. This is also 100% perfect. Because you would have heard this word, in 74 we have got some percentages which clearly says in general the drawback percentage is 98% if you are exported without use. But if you export after use, the percentage will keep coming down based on the length of usage. 95, 85, 75, 70, 65, 60, like that percentages will keep coming down based on the length of usage. Clear? Next. In case drawback is not paid to the applicant within 1 month, the interest has to be paid to the applicant in both the cases. Fantastic. That is also 100% correct. Because there is something called interest on drawback. We have got one section called section 75A of Customs Act, which clearly talks about interest on drawback. Getting clarity, friends? Last one. Drawback is not allowed in case where market price of the goods is less than the amount of drawback. Perfect answer. If the market price of the goods, I repeat one more time, if the market price of the goods, if what, my dear friends? Market price of the goods, if market price of the goods is less than the amount of drawback, then there is no question of drawback at all. And let me tell you, this particular provision is given by one wonderful section called section 76, which clearly talks about drawback is not allowed in certain cases. That is nothing but when market price of the goods, when what, sir? Market price of the goods is less than the amount of drawback, then we cannot ask for drawback, my dear friends. Because section 76 clearly says that if market price of the goods is less than drawback, then please don't ask drawback. That's it. So if you observe, first one also correct, second one also correct, third one also correct, fourth one also correct. So my answer is straight away, none of the above. None of the above is false. None of the above is false. Because all the 4 options, whatever they gave, all the 4 points what they gave are completely correct. In exam, generally, students have a tendency to select the answer as all of the above. But that cannot always be right answer. Only sometimes it can be right answer, but many a times it can be wrong answer also. So it is very important that you select the right option very clearly, because the wrong option you select, you will completely fall in suit. So it is very, very important that you select the right option very clearly, because if something goes wrong anywhere, then gone, my dear friends. Your marks are completely gone. So it is very important you present very properly and close the discussion. Clear? This is the end of story for multiple choice questions which are there in RTP of November 2019. But what we have done is only multiple choice questions. We have got lot more interesting questions to talk, which will start discussion now. Are we ready, my dear friends? Everybody said, speak out, come on. Are we ready to start? Come on, my dear friends, let's proceed. Come on friends, now that we are done with discussion on the multiple choice questions, let's move forward to discussion about the other questions also, what are there in this. Because it's not just multiple choice question, multiple choice questions will actually help you a lot to get the bigger number, my dear friends. You should actually feel happy that multiple choice questions are there as a part of your syllabus. MCQs will actually help you to get big numbers in the exam. Clear? Let's look at the next question. Come on. Question number 11. Chanakya Academy is registered under GST in the state of Uttar Pradesh. Very good. The academy runs the following educational institutions. Now what is that they are running? KIT, CA Shiva Institute of Technology, a private engineering college in Ghaziabad. KIT also runs distant learning postgraduate programs. Distant learning postgraduate engineering programs. Very good. Exams for such programs are conducted in select cities at centers appointed by the KIT. Very good. All the engineering courses, including distant learning postgraduate engineering programs run by KIT, are recognized by the law. Very good. So one point let me tell you, my dear friends. That is something very interesting, which let me very clearly tell you. That is, friends, GST law has given some exemptions for education institution. Now, what is education institution? That is very interesting. Education institution basically talks about something called somebody who is engaged in something like this. Preschool. Come on. Higher secondary school. Preschool and higher secondary school are equivalent. Now, what is higher secondary school? Higher secondary school always means 12th. Correct or not? Second, there is something called education as a part of curriculum. Education as a part of what, my dear friends? Curriculum. I repeat one more time. Education as a part of curriculum for obtaining. Education as a part of curriculum for obtaining qualification recognized by law. For obtaining qualification recognized by law. In fact, that is the reason why practically when students join any BCom course or any BTech course or any engineering course to obtain a qualification recognized by the law, they never ever pay GST on the fees what they charge. That is where no school also practically will charge GST. No intermediate college also will charge GST because service given by them is exempt. And one more point is education as a part of education, what, my dear friends? As a part of an approved education, as a part of an approved education, as a part of an approved vocational education, as a part of an education, as a part of an approved vocational educational course. Approved vocational education course. Whenever I say a vocational course, in India we have got something called Ministry of Skill Development. They conduct some vocational courses so that unemployed youth gets employment, something like cell phone repairing, these kind of vocational courses they conduct. Clear, my dear friends? So let's see now. So service given by them to faculty, students and staff, that is exempt. And moreover, service received by these people also is exempt. And we have got some good services like transportation of students, catering, security, cleaning, housekeeping, or there is something like service by way of admission to or conduct of examination. Like this, some good services are given as exemption in the law. Getting clarity, friends? Now let's see now. Second, Little Millennium, a preschool in Lucknow. Very good. Preschool in Lucknow. Friends, there are some services like transportation of students, transportation of what, my dear friends? Students, faculty and staff. Transportation of students, faculty and staff. Second, catering. When I say catering, catering also covers any something called midday meals program sponsored by the government. We all know what is midday meals. Exactly. Then there is something called third one, security or housekeeping services. Security or what, my dear friends? Housekeeping services. Friends, in this context, one very important point what I want to tell you is that these three services what I wrote, I repeat one more time, these three services what I wrote, that is transportation of students, faculty, staff, catering service, security housekeeping service, when they are given to preschool or higher secondary school or equivalent, only then it is exempt. I repeat one more time, my dear friends. What is the line I am trying to tell you? Service by way of what, sir? Service by way of transportation of students, faculty and staff. Second, catering. Third, security and housekeeping services. These three services are exempt only when they are provided to an education institution engaged in preschool or higher secondary school or equivalent. Getting clarity, friends? Everybody, sir? Exactly. Next, Little Millennium, a preschool in Lucknow. Next, what other things they have got? So we're talking about Chanakya Academy. Number one, they have got one engineering college called KIT. Second, Little Millennium, a preschool in Lucknow. Third, Bright Minds, a coaching institute in Kanpur. It's a coaching institute. Institute provides coaching for Institute of Bank Personnel Selection Probationary Officers exam. So for some banking exam, they are providing coaching. So there is something like a private coaching center. For any private coaching center, GST will definitely apply. No exemption will be given. Getting clarity? Last one. Spring Model, a higher secondary school affiliated to CBSE board. Very good, no problem. Academy provides following details relating to, come on, see that? Academy provides following details relating to expense incurred by various institutions run by it. When I say expense incurred, that means what? We are talking about service received by them. Service what, sir? Received by them. See now. Printing services for printing what, my dear friends? Question papers. Papers and content are provided by institution. What is that, my dear friends? We are talking about something called printing services for printing question papers. Paper and content are provided by the institution. Sir, there is something called service in relation to conduct of examination. Service in relation to what, my dear friends? Conduct of examination. Let me tell you very clearly that service in relation to conduct of examination, that service received by education institutions is always exempt, sir. Is always what, my dear friends? Exempt. Provided it is an education institution. But if it is a private coaching center, that becomes taxable. So when we talk about KIT, that service is exempt. But when we talk about Bright Minds, then definitely it is taxable. Because Bright Minds is a private coaching institute. They are giving coaching for bank examination, which is definitely taxable. Then Spring Model Higher Secondary School, that is also exempt. Getting clarity, friends? Next. Paper procured for what, my dear friends? For printing the question papers. This will not be exempt. Sir, exemption is given only for services received in relation to conduct of examination. But if it is not services, then definitely it is taxable. So 4,30,000, this also becomes taxable. And of course, my coaching center Bright Minds is anyways taxable. Last one, what is the last one? Spring Model, that is also taxable. I strongly believe that we are getting full clarity of thought on this point, my dear friends. Speak out. Exactly. Next. Honorarium. I repeat one more time, honorarium to paper setters and examiners, not on the rolls of institution, because if they are roles of the institution, then it becomes something like services given by employee to employer in the course of employment. In case of service given by employee to employer in the course of employment, that is neither regarded as supply of goods nor regarded as supply of service. But here, this is a case where what we are talking is, it is not employees. it is other than employees, but they are giving some service in relation to conduct of examination, and that service is straight away exempt, my dear friends, because service provided to an educational institution, as I wrote very clearly, service provided by education, service provided to, basically service provided to an educational institution by way of conduct of an examination, that is straight away exempt, my dear friends. But exemption is only for educational institution, and education institution does not cover private coaching centers. That is why in Bright Mind case we clearly told taxable. Clear, my dear friends? So any service provided to or received by, whatever it is, any service provided to an education institution in relation to conduct of examination is exempt, or any service received by education institution in relation to conduct of examination is exempt. Clear, my dear friends? Everybody say, very important. Next, rent for exam centers taken on rent, like schools, etc., for conducting examination. So straight away this is also related to what? Conduct of examination, so that will automatically become exempt. But if you observe, there is a figure given for bright minds also. For bright minds, I'll 100% tell the word taxable, because exemption is not applicable for this private coaching centers. Getting clarity? Next, subscription for what? Online educational journals. Very, very interesting point. Subscription for online educational journals. Very important. Sir, one point very clearly let me tell you is that, when we talk about online educational journals, my dear friends, listen please, we are talking about something called supply of online educational journals. Supply of online educational journals, or it can be some periodicals, something like educational related magazines. Getting clarity, friends? Supply of what? Online educational journals, or what, my dear friends? Or what? Periodicals. Now when we talk about, listen please, when we talk about supply of online educational journals or periodicals, this is exempt only when provided to, this is exempt only when provided to an educational institution. This is exempt. I repeat one more time. This is what, my dear friends? This is exempt only when provided to an educational institution engaged in educational institution provided to an, wait a second, provided to an educational institution engaged in providing education, engaged in providing education as a part of a curriculum, as a part of what, my dear friends? As a part of curriculum for obtaining, as a part of their curriculum for obtaining a qualification, for obtaining a what, my dear friends? Qualification, for obtaining a qualification recognized, for obtaining a qualification recognized by any law, for obtaining a qualification recognized by any law for the time being in force. For the time being in what, my dear friends? Force. So basically we are talking about something called for obtaining a qualification. I repeat one more time, for obtaining what, my dear friends? For obtaining a qualification recognized by any law for the time being in force. So for them only it is exempt. So if this service is given to, I repeat one more time, if this service is given to, somebody called preschool, if this service is given to somebody who is engaged in preschool or higher secondary school or somebody who's engaged in vocational courses, then definitely that service is taxable. So please understand one very important point which I want to clarify for you once again is that, let me go back here. So if you go back here, I wrote 3 points there. In case of transportation of students, I repeat one more time, in case of transportation of students, faculty and staff, second, catering, third, security or housekeeping service. These three are exempt. One more time I repeat, these three are exempt. Come on, my dear friends. These three are exempt only when they are provided to, preschool or higher secondary school or equivalent. These three are exempt. One more time I repeat, sir. These three are exempt only when they are provided to whom, sir? Only when they are provided to preschool or higher secondary school or equivalent. Getting clarity, friends? But one point very clearly I want to clarify is that in case of online educational journals, in case of supply of what? Online educational journals or periodicals, if they are supplied to preschool or higher secondary school or vocational courses, then definitely it is taxable. Exemption will come only when the supply of online educational journals or periodicals is done only to an educational institution who is engaged in providing education, as a part of curriculum, what, my dear friends? Curriculum for obtaining a qualification recognized by any law for the time being in force. Getting clarity, friends? I strongly believe that we are clear with this point. Everybody, sir? Fantastic. Come on, let me move forward. So if I go back, what is this fifth point talking about, my dear friends? Fifth point is talking about something called subscription for what? Subscription for online educational journals. So when we talk about, Little Millennium has taken the subscription for online journals on child development and experiential learning. Very good. So when we talk about this engineering college, that will definitely be what, my dear friends? Exempt. Engineering college will be exempt. But when we talk about Little Millennium, the Little Millennium will definitely become taxable, because online journals exemption is only applicable for those institutions who are engaged in providing education as a part of the curriculum for obtaining qualification recognized by the law. Next, third one, bright minds without any second thought, that is always taxable because they are private coaching. Last one, spring model, that spring model also becomes taxable. Getting clarity, friends? Next. Higher charges for buses used for transporting students and faculty from their residence to the institutions and back. So this is exempt for whom? Transportation of students, faculty and staff. Exemption only for an institution engaged in preschool education and higher secondary school or equivalent. So second one will be exempt. Fourth one is also exempt. But if it's engineering college, then definitely it is taxable. And third one, that is private coaching, that is also taxable. So if Shiva Teja has got some buses, let's say Shiva Teja has got some 10 buses, I am giving service of transportation of students, faculty and staff. If I give that service to a school, then it is exempt. If I give that service to preschool or higher secondary school, then it is exempt. But if I give that service to an engineering college, then definitely it becomes taxable. Next, catering service for running a canteen in the campus for students. Next, one line they told is catering service for kit include a sum of 60,000 for catering at a student event organized in a banquet hall outside the campus. Student event, what they have done, my dear friends? Student event, and where is it organized? In a banquet hall outside the campus. So what? Catering service, I clearly told, that is straight away taxable, my dear friends. Straight away taxable. But if it is preschool, it is exempt. Private coaching, definitely taxable. Higher secondary school, that is also exempt. Going back back to the roots of the concept what I taught, that is transportation of students, faculty and staff. Second, catering, including midday meals program. Third, security or housekeeping services. These three are exempt when they are provided to whom, my dear friends? To an educational institution who are engaged in preschool or higher secondary school or equivalent. Clear, sir? Speak out, my dear friends. I strongly believe that we are getting full clarity on this point. Speak out. Now, same logic going back again to the question. Next point, what we have? Security and housekeeping service. Brilliant. Security and housekeeping services for spring model includes a sum of 80,000 payable for security and housekeeping at student event organized in a banquet hall outside the campus. So what? Still it becomes exempt for preschool, higher secondary school or equivalent. And other cases, definitely it is taxable without any second thought. Because service by way of transportation of students, faculty and staff. Second, catering including midday meals. Third, security or housekeeping services. That is exempt only when it is provided to an education institution engaged in preschool or higher secondary school or equivalent. That's all. I'm sure we are getting a great clarity of thought on these points. Speak out, sir. Next. The Academy further provides the following details and receipts of services, receipts of various institutions run by it. So this they are talking about their outward. So far what we discussed was about services received by them. Now we are talking about services given by them. Next, with the help of following details, determine the amount of GST payable, if any, on the goods and services received during April to September by various institutions run by Chanakya. Already we have done. Next, compute net GST liability of Chanakya payable from electronic cash ledger. This will talk about their output, sir. All the amounts given are exclusive of tax. Then rate of GST is 12% on goods, catering service 5%, other service 18%. So apply that percentages, then you'll automatically get your answer. I strongly believe that we are getting clarity of thought on this. Speak out, my dear friends. So already we discussed about the story of their inward. Now let's talk about their outward service given by them. Tuition fees they give and transportation fees charged from student. So one point let me tell you very clearly is that whenever we talk about this concept, one important point what you need to know is that when we talk about services by educational institution, exemption is given for services provided to students, faculty and staff. That is always exempt. To student, faculty and staff, that is always exempt. So when we talk about kit, whatever service they are giving will be exempt. Obviously, Little Millennium, that is also exempt. Bright Minds, this is 100% taxable because this is a private coaching center. This is what, my dear friends? Private coaching center, where they are giving coaching for bank coaching. So Bright Minds will definitely be taxable. I'm talking about the output, sir, output. Spring model, that is also exempt. Output I'm talking because law very clearly told that when we talk about service given by educational institution, that is exempt when it is provided to students, faculty and staff. So what is that we'll focus is only on Bright Minds, my dear friends. Clear, sir? Tuition fees how much? 20 lakhs. Transport fee how much? 1,30,000. So if I try to figure out the answer, when we talk about their output tax, otherwise I'm talking about their outward supply. Inward supply discussion is already over. We are talking about their outward supply, my dear friends. And when we talk about outward supply, we are going to pay tax only for Bright Minds because they are acting as a private coaching center. Clear, my dear friends? So what is that tuition fees they have got? Tuition fees they have got is nothing but 20 lakh rupees. Correct or not? And they have also got transport fee 1,30,000. Tuition fee is 20 lakh rupees. Correct or not? tuition fees 20 lakh rupees, and they have also got, what my dear friends, transport fees 1,30,000. Transport fee 1,30,000. Total figure comes to 21,30,000. From this 21,30,000, when I calculate my output tax, what is my output tax at the rate of 18%? 21,30,000 into 18%, my dear friends. That figure is coming to 3,83,400. Let me take that figure first. 3,83,400. Come on, kindly please concentrate. 3,83,400. This is my output tax. From this, I'll reduce my input tax credit. Now, what is my input tax credit? Let me go back to the question and focus only on what's there? Bright minds. Bright minds. Bright minds 1,50,000 into 18%. Correct or not? 1,50,000 into 18% comes to how much, my dear friends? Come on, see now. 1,50,000 into 18%, which comes to 27,000. For service, they clearly told 18%, 27,000. And for paper, this 2,58,000, I'll calculate tax at the rate of 12%. Because for goods, they told 12%. 2,58,000 into 12%. That comes to 30,960. Let me take that figure, 30,960. Then this 1 lakh into 18%, which comes to 18,000 straight away. Online journals, 2,20,000. Online journals means what? It is service or goods? Definitely it is goods. So on that 2,20,000, I mean to say subscription for online journals, right? So when we talk about subscription for online journals, it is like a service what we are taking. So that becomes a service. So will definitely become a service, and the rate of GST will be 18%. If you get physical copy, we'll call it as goods. But when you take it online, no good is coming. It's like a service. 18%. 2,20,000 into 18%. 2,20,000 into 18% coming to 39,600. Sir, I'm calculating only for this private coaching center, Bright Minds. The reason being very clear that they are required to pay their output tax. That is why I'm trying to find out what is the input tax credit they will get. Then higher charges for buses, 1,30,000. That also into 18%. 1,30,000 into 18%. This comes to 23,400. Then catering, how much, my dear friends? 1,80,000 into 5%, which comes to 9,000. But I strongly hope and believe that you guys know that catering is a blocked credit because of section 17(5) clause B, which clearly talks about food and beverages, outdoor catering. On that we cannot take input tax credit. Health insurance, life insurance, all that we can't take credit unless it is obligatory on the part of employer. When I say obligatory, it is obligatory as per law, not as per policy of the company. So this becomes a blocked credit. Then security housekeeping, 3,75,000 into what percent again? 3,75,000 into 18%. So what is the figure? 3,75,000 into 18%. This comes to 67,500. So if I try to calculate my total of input tax credit, what is that starting I've got? Come on, step by step we'll add 27,000 plus. Second, 27,000 we have taken, then 30,960. Next one, 18,000, correct or not? 18,000. The next what we have got? 39,600. Then how much? 23,400. I think small correction. Let me add the numbers once again. Come on. Let me take the total once again. 27,000 plus 30,960 plus, Come on, my dear friends. 27,000, 30,960, 18,000 plus 39,600. Correct or not? Plus 23,400 plus anything else we have got. Block credit I will not take into account. Last one 67,500, my dear friends. 67,500. So if I exclude the block credit and take the balance credit, the figure is coming to 2,06,460, my dear friends. So what I'll do is I'll go back to my answer. My input tax credit is 2,06,460. I'll take credit only related to what, my dear friends? Bright minds. Other credit I'll not take, because when output is exempt, input tax credit is not allowed. If output is taxable, only then input tax credit is allowed. If output is zero rated also we can take credit. But if output is exempted, we can't take credit. And zero rated covers only exports, second supplies to SEZ. That's all. Getting clarity, friends? So to find out the final answer, what is the answer now? 3,83,400 minus 2,06,460 is what I got as my input tax credit. So final answer 176,940. 1,76,940. This is the net payable through cash ledger. Obviously, we all know that we have got credit ledger and cash ledger. Credit ledger will have input tax credit. Cash ledger is what we pay from our own account. That's it. I'm sure we got full clarity of thought, my dear friends. Very good. That is the story of this beautiful question called question number 11. Very interesting. Like this, one big question will come in exam, which will have a weightage of at least 10 marks in the exam. Very scoring, very wonderful, which we can't afford to miss out. Are we clear? Speak out. Friends, come on, reply. Very good. Come on, let me proceed, my dear friends, and start discussion about the next question, sir. Yes, come on, my dear friends. So friends, we are done with discussion about question number 11, which was dealing with the beautiful concept of exemption related to educational institutions. And I strongly believe that we have got some great clarity on that concept. In fact, that kind of questions gives some tremendous clarity on exemption related to educational institution. And I strongly believe that we have got some great sense of clarity on that concept, my dear friends. Are we clear, sir? Fantastic. Now let me look at question number 12, my dear friends. Come on, see now. All Fit Laboratories Limited is a registered supplier of, what, sir? Registered supplier of bulk drugs in Delhi, paying tax under regular scheme. That means they are not under composition scheme. Exactly. Now see now, it manufactures bulk drugs and supplies the same in the domestic as well as overseas market. Next slide. The bulk drugs are supplied within Delhi and in the overseas market directly from company's warehouse located in South Delhi. So they are doing some domestic business as well as doing some overseas market. Very good. Now see next slide. For supplies in, come on my dear friends, for supplies in other states of India, company has appointed consignment agents in each such state. Very good. That means they are doing a stock transfer to the consignment agents and from there they are selling. Good. Next see. However, supplies in Gurgaon, that is Haryana, and Noida, UP, are directly affected from South Delhi warehouse. That means we are not sending to consignment agent. For Gurgaon and for Noida, we are directly selling from Delhi warehouse. Next, the drugs are supplied to consignment agents from South Delhi warehouse. Very good. All Fit Laboratories Limited also provides drug development services to drug manufacturers located in India, including testing of their new drugs in its laboratory located in Delhi. Now see below. Company has furnished following information for the month of January. And below, let me see first of all, what is there asking? You are required to determine GST liability as the case may be of All Fit Laboratories Limited for the month of January with the help of following additional information. First of all, let's look at the basic points, then we look at the additional information. See now. Advance received towards drug development services to be provided to Orochem Limited, a drug manufacturer located in Delhi. Drug development service has been provided in February and invoice is issued in February. But if you observe very carefully, we got advance when? We got advance in January only. And I strongly hope and believe that you guys know one concept. Whenever we get advances, my dear friends, very important point is that we are always required to pay GST on advances what we receive. Exemption is given only for supply of goods. In case of supply of goods, there is no need to pay GST on advances. Clear? But in case of supply of services, we are definitely required to pay GST on advances without any second thought. There is no need to pay GST on advances in case of supply of goods. But in case of supply of services, we are definitely required to pay GST on advances. In fact, for goods, they gave an exemption because of notification number 66 by 2017 dated 15th November 2017. That particular notification gave exemption for goods but not for services. So in case of supply of goods, if we get some advance, on that advance we don't pay GST. Because in case of goods, time of supply will arise only at the time of invoice. But that concept is not like that in case of services. In case of services, GST liability will arise even at the time of advance also. Getting clarity, friends? Very good. Next, advance received for bulk drugs, that means what? Goods to be supplied to Novik Pharmaceuticals, a wholesale dealer of drugs in Gurgaon, Haryana. Invoice issued at the time of delivery in March. On this point, I will straight away tell you that is no GST liability. Come on, my dear friends. No GST liability will come in January month. I repeat one more time, what is the language, my dear friends? No GST liability would arise in the month of January. The logic being very clear that in case of supply of goods on advances, we were not required to pay GST. Otherwise, time of supply will not arise. But in case of services, we are definitely required to pay GST on advances. Getting clarity, guys? Very good. Next. Supply of what? Come on, see now. Sorry. See now, my dear friends. Come on. Supply of what, sir? Bulk drugs. Supply of bulk drugs to wholesalers. I mean to say, supply of bulk drugs to wholesale dealers of drugs in what, my dear friends? Delhi. On this, definitely we have to pay GST. No excuse whatsoever. Correct or not? Next. Bulk drugs supply to Anchor Pharmaceuticals Inc. USA under bond. Consideration received in convertible foreign exchange. Let me tell you, this is technically called as a zero rated supply. Under GST law, we have got two things which are called as zero rated supplies. Number one, exports. Number two, supplies made to SEZ. Supplies made to what, my dear friends? SEZ. Those two are regarded as zero rated supplies, for which we'll apply something called bond or letter of undertaking. And one point to be known very clearly is that in case of zero rated supply, we do not pay any output tax, but input tax credit is definitely allowed. That is where I told you so many times, if output is taxable, credit is allowed. If output is zero rated, again credit is allowed. But if output is exempted, then 101% credit is not allowed. I strongly believe that we are getting clarity of thought on this. Speak out, my dear friends. Very interesting, very fantastic, and very important. Next line. Drug development services. Come on, I'll repeat that word. What is that word, sir? Drug development services provided to whom, sir? Uni Pharma Limited, a drug manufacturer located in Delhi. On the drug development services, definitely we are required to pay GST. Without any second thought, we are 100% required to pay GST, my dear friends. Are we getting clarity, friends? Good. Next. Consignment of bulk drugs were sent to Cardinal Pharma Private Limited and Rochester Medicos, agents of Alfit Laboratories in Punjab and Haryana, respectively. And let me tell you very clearly that whenever goods are sent from principal to agent, that is 100% regarded as supply. That is 100% regarded as supply. Next, see now. Cardinal Pharma and Rochester Medicos supplied these drugs under their invoices to the medical store located in the states for 60 lakhs and 50 lakhs respectively. 60 lakhs and what, sir? 50 lakhs respectively. Total is how much, my dear friends? 1 crore 10 lakhs. Correct or not? Speak out. Now, one point very clearly what I want to tell you is that something very interesting like this. That is, whenever we talk about supplies made from principal to agent, supplies made for what? Principal to agent, we have got one rule called Rule 29, which talks about value of supply in case of supplies made from principal to agent, which clearly says value of supply will be number 1, open market value, or 90% of price charge for supply of goods of like kind and quality to an unrelated customer. Clear my difference? So if you observe, to unrelated customer, what price we are charging? 60 plus 50 is how much? 1.1 crore. This into 90%, which comes to how much, my dear friends? 1 crore 10 lakhs into 90% is how much? 99 lakhs. That is regarded as my value of supply as per provisions of Rule 29. As per provisions of Rule 29, that is what is regarded as my value of supply. And I strongly believe that we are getting full clarity on this point. Speak out. Very good. Next. Bulk drugs have been supplied to Ron Medicos, a wholesale dealer of bulk drugs in Gurgaon, Haryana, for a consideration of 15 lakhs. Very good. Onfit Laboratories Limited owns 72% share. Come on, my dear friends. What is the percentage of share they have got? 72% shares of Ron Medicos. So let me tell you, when 72% share is there, they are definitely called as related persons. Come on, my dear friends, they are definitely called as what persons? Related persons. And let me tell you, in case of related persons, we have got one special rule called Rule 28, which says in case of supplies between related persons, value of supply will preferably be open market value. And if open market value is not ascertainable, then value of supply will be price of goods or services of like kind and quality. That is also not possible. That then we will apply Rule 30, that is 110% of cost. And even if that is not possible, we will apply something called Rule 31, best judgment. But see here once, come on. Open market value of the bulk drugs supplied to Ron Medicos is 30 lakhs. Already we have got open market value. Very good. Further, Ron Medicos Private Limited is not eligible for full input tax credit. Now, why that point is given, let me tell you very clearly. In Rule 28, we have got one special point in the law, which clearly says that in case where recipient is eligible for full credit, then invoice value shall be deemed to be open market value. If you observe, for what value they actually supplied at a value of 15 lakh rupees. That is what is nothing but the invoice value. But one point very clearly, let me tell you, Rule 28 says if recipient is eligible for full credit, then invoice value shall be deemed to be open market value. Here if you observe, they clearly told Ron Medicos Private Limited is not eligible for full input tax credit. So if they are not eligible for full input tax credit, then we will not consider invoice value. We will consider only actual open market value. That is nothing but 30 lakhs. Are we getting clarity, friends? Speak out, sir. So friends, all the above given amounts are exclusive of GST. For bulk drugs, it is 2.5%, 5%. Services 9%, 9% and 18%. I strongly believe that question is very clear for all of you. Speak out, my dear friends. So if you observe the question very clearly, what is all there in that question, my dear friends? That question consists of basically goods as well as service. And we are required to calculate only the GST liability. Correct or not? Come on, let me do this question. Let's figure out the answer, my dear friends. Come on, let me do the presentation so that we are very clear with what we have done, my dear friends. Come on. So when we are trying to calculate what, my dear friends? GST liability. GST liability. I'll take columns as particulars, CGST, SGST, last one IGST. Come on my dear friends, let me go back. For the first one, advance received towards services, on that will GST come? Yes. And if you observe very clearly, where are we actually? We are in Delhi. All of it is in Delhi. And advance received towards drug development services to be provided to Orochem Limited, a drug manufacturer located in Delhi. So a Delhi guy is given to a Delhi guy. So definitely what will come is CGST and SGST. Correct or not? And what is the rate, by the way? The rate is 9% and 9%. Advance for services. And moreover, if you observe, the value is 5 lakh rupees. So if it is 5 lakhs, we will charge something called 5 lakhs into 9%. Correct or not? And how much is 5 lakhs into 9%? Nothing but 45,000. Friends, speak out. Exactly. So CGST is 45,000. SGST is 45,000. IGST, nothing will come. Next. Second one was advance for drugs. This basically means advance related to goods. For this straight away I'll put dash, my dear friends. Why dash, sir? Dash is being put only because of a simple reason and fact that GST will not apply. Clear? Next. Next one. Third point is what? Supply of bulk drugs. There is supply of what, my dear friends? Bulk drugs. That also will answer now. Come on, see. Supply of bulk drugs. What is the value, by the way, my dear friends? The value is nothing but 60 lakh rupees. 60 lakh rupees is the value, and we are supplying to somebody in Delhi only. When we are supplying to somebody in Delhi only, what we will charge is CGST and SGST. 60 lakhs into what is the rate, by the way? 2.5% goods, right? So let me check the figure. Come on. 60 lakhs into 2.5%. It comes to 1,50,000. So 1,50,000 CGST and 1,50,000 SGST. Are we getting clarity, guys? Come on. 1,50,000 CGST, 1,50,000 SGST. That is what is the answer for this particular point. Story does not end here. Next what? Come on. Supply of bulk drug is done. Then bulk drug supplied to Anchor Pharma of USA. That is nothing but zero rated supply. Correct or not? For which definitely GST will not arise. Correct or not? Bulk drugs to USA, and that is a zero rated supply. And when that is a zero rated supply, the question of GST does not arise. Clear, my dear friends? And moreover, that is because we have taken something called LUT, which stands for letter of undertaking. Next line. Drug development service provided to Uni Pharma, they are also in Delhi, 6 lakh rupees. That also will take it. And for that we will charge CGST and SGST. Drug development service. What was the value, by the way? The value is nothing but 6 lakhs. 6 lakhs into what percent? 9%. Correct or not? So when I apply 6 lakhs to 9%, I'll get the figure as 54,000, my dear friends. Clear, everybody? So 54,000 is CGST, 54,000 is SGST. And IGST, of course, I'll put dash. IGST does not arise. Next. Supplies to agent. Supplies to what, sir? Agent. And agents are where? Punjab and Haryana. So what we'll charge is definitely IGST. And we'll not take the value as 1 crore 10 lakhs. We'll take the value as only 99 lakhs. Correct or not? Supply to agents. And very clearly we'll apply some rule called, which rule, sir? Rule 29. Because of which we have taken something called 90% price. 1 crore 10 lakhs. 1 crore 10 lakhs into 90%, 99 lakhs into what percent, my dear friends? 5%, which comes to 4,95,000. That becomes my IGST liability. 4,95,000. Correct or not? Then finally last one, supply to related person. And this concept is coming because of Rule 28. And we are not going to take that value as 15 lakh rupees. We are going to take the value as 30 lakhs only. The logical point is very clear that when the recipient is eligible for full credit, then invoice value shall be deemed to be open market value. And that provision will apply only when recipient is eligible for full credit. And in question only they told he is not eligible for full credit. So definitely we'll take the figure as 30 lakhs only. Clear, my dear friends? And for 30 lakhs, we'll straight away apply the rate as GST as 5% because we supplied to somebody in Haryana. 30 lakhs 5%. How much is 30 lakhs 5%? Nothing but 1,50,000. 30 lakhs 5% comes to 1,50,000. So therefore, when we talk about my total GST liability, guys, come on, what will be my total GST liability? That is very interesting. What will take the total and calculate? First, 45,000 plus 1,50,000 plus 45,000. Correct or not? First one 45,000, then 1,50,000. 45 plus 150 plus 54,000. This comes to 2,49,000. And of course, when CGST is 2,49,000, SGST also is of course 2,49,000 without any second thought. Come on, 2,49,000. Second one is also 2,49,000. And the last one will be 495 plus 1,50,000. 495 plus 150 comes to 6,45,000, my dear friends. This is what is the figures for this particular question and this particular answer. Fantastic. I'm pretty sure that we got some great sense of thought and a great sense of clarity on this particular question, my dear friends. Pretty simple and very easy, and more than anything, it's very, very wonderful and a brilliant concept. And I strongly believe that we have got great clarity on this point. Clear, sir? That's it. That's the end of story for question number, what, my dear friends? 12. Then moving forward, come on. Question number 13. Very simple, very interesting and very important question. See now. Prada Forex Private Limited, registered in Delhi, is a money changer. So for money changer, we have got one special valuation rule called Rule 32.2, sir. See now, it has undertaken the following purchase and sale of foreign currency. $1,000 are purchased from Nandi Enterprises at a rate of 68 per dollar. Whereas RBI rate is 68.60. That means if they would have gone to RBI, they would have got 68.60. But Prada Forex has given only 68 per dollar. Second, $2,000 are sold to Meenavati at a rate of 67.50 per dollar. Whereas RBI reference rate is not available. Very good. Two bits they have asked, which I want you to understand, my dear friends. First bit, determine the value of supply in each of the above case in terms of Rule 32.2a, Rule 32.2b. First of all, it is very important to know what is the concept of Rule 32.2a and Rule 32.2b. Come on, what are the rules we have got? We have got Rule 32.2a. Then we have also got Rule 32.2b. And let me tell you very clearly, I hope you would have heard also, but Rule 32(2)(b) is an optional. But once you opt for that Rule 32(2)(b), you cannot withdraw, which clearly says something called, if currency what you have exchanged is up to 1 lakh, then we look at something called 1% of GSE, and GSE is nothing but gross amount of currency exchanged. Gross amount of currency exchanged, and minimum will be 250 rupees. And 1 lakh to 10 lakhs, we will take it as 1000 plus. Now important point to know is, how did the 1000 come? The 1000 has come because of 1 lakh into 1% is 1000. 1000 plus 0.5% of GSE minus 1 lakh. That means 0.5% of the amount exceeding 1 lakh. Finally, more than 10 lakhs. More than what, sir? 10 lakhs. We'll take the figure as 5,500. What the figure will take, sir? 5,500 plus 0.1% of GSE minus 10 lakhs. And maximum is 60,000. They did not say minimum, they told maximum. And please understand, how did we get 5,500? That is because on 1 lakh 1% is 1,000, and on 9 lakhs 0.5% is 4,500. 4,500 plus 1,000 is 5,500. That's how we got these figures. And other side of the story, when I talk about Rule 32(2)(a), my dear friends, what we do in Rule 32(2)(a) is something like this. We will say something called, if RBI rate is available, then RBI rate minus our exchange rate, the difference will become value of supply. But RBI rate is not available, then 1% of currency exchange, that becomes value of supply. So in this particular case, first bit, if you observe, what is the point? $1,000 are purchased from Nandi Enterprises at a rate of 68 per dollar, whereas RBI rate is 68.60. So automatically, my dear friends, what will become value of supply? Value of supply, and I'm talking about Rule 32(2)(a), sir. Value of supply will be, how much, my dear friends? $1,000 into 68.60 minus 68. So it becomes 0.60 into what, my dear friends? $1,000. And 0.60 $1,000 is nothing but 600 rupees. That becomes my value of supply. Clear, sir? Whereas in second bit, if you observe, $2,000 are sold to Meenavati at 67.50 per dollar. Correct, my dear friends? Come on, please look at that. Kindly concentrate. So friends, if you observe very carefully, there is a good amount of difference between Rule 32(2)(a) and Rule 32(2)(b. Wherein you have to observe very clearly that Rule 32(2)(a) talks about value of supply, which clearly says that in case where RBI rate is available, the difference will become value of supply. That means the difference between RBI rate and our exchange rate will become value of supply. And whereas if RBI rate is not available, then what we exchange into 1% becomes value of supply. Whereas the story is totally different when it comes to Rule 32(2)(b, which clearly says value of supply will be up to 1 lakh, 1% of GSE, minimum 250 rupees, 1 lakh to 10 lakhs, 1000 plus 0.5% of GSE minus 1 lakh, above 10 lakhs, 5,500 plus 0.1% of GSE minus 10 lakhs, and the maximum is going to be 60,000. I strongly believe that we got full clarity on this point. Speak out. Fantastic. Come on. So first bit is done in Rule 32(2)(a). Let's look at the second bit, my dear friends. First bit is what? RBI rate is available. So I have straight away taken difference is value of supply. Now see, second bit. $2,000 are sold to Meenavati at the rate of 67.50. Come on, my dear friends, at what rate? 67.50, and RBI rate for that day is not available. So if RBI rate is not available, what we'll do then? Whatever we exchange into 1%. Come on. So what is my answer then? Value of supply will be equal to $2,000 into 67.50 into 1%. That's it. Getting clarity, friends? Come on, let me look at that figure. $2,000 into 67.50 into 1%. This comes to 1,350. That becomes my value of supply. Getting clarity, friends? Because the logic is very simple. If RBI rate is available, then difference becomes value of supply. But if RBI rate is not available, then what we exchange into 1% becomes value of supply. See now? So what is the answer, guys? The answer works out to 1350. That's it. That is what is the story of Rule 32(2)(a). Other side, when we talk about Rule 32(2)(b), my dear friends, in case of Rule 32(2)(b), RBI rate is irrelevant. Straight away we'll calculate value of supply based on what we are exchanged. Come on, see now. Let's look at the answer. What is the first bit? What is the value we exchanged for? $1,000 we exchanged for 68. RBI rate is not at all relevant. Come on, speak out, my dear friends. RBI rate is what? Not at all relevant. We'll just look at what rate we have exchanged. So what is the figure we'll take then? We'll take it as $1,000 into 68. It comes to 68,000. Correct, my dear friends? 68,000 is the currency exchanged. 68,000 is the currency exchanged. So therefore, come on, my dear friends, please look at it. Come on, kindly please concentrate and please focus. Therefore, value of supply will be equal to what, my dear friends? Come on, value of supply is 68,000, right? So it becomes 1% of 68,000. This comes to 680. That's it. Because minimum they told 250. Anyways, mine is more than 250. So I'll take the answer as straight away 680. I'm sure we are clear with this. Fantastic. Come on. What is second bit? Come on. Second bit talks about something called $2,000 into 67.50. That comes to 1,35,000. And this 1,35,000 is basically my currency exchanged. 1,35,000 is basically my currency exchanged. Correct or not? So when I start figuring out my value of supply, what is that answer I'm going to get? Value of supply will be 1,35,000, right? So when it is 1,35,000, which category it is? Second category. So what is the answer we'll take? 1,000 plus 0.5% of 35,000. Why 0.5% of 35,000? Because we'll take 1,000 plus 0.5% of GSE minus 1 lakh. And what is 0.5% of 35,000? Come on, use calculator, no problem. 35,000 into 0.5%. This comes to 175. So 175 plus that 1,000. So what is the answer coming to? 1,175. 1,175. That's all. This is the story of this particular question. Like this, small questions also can come in exam for 4 to 6 marks. And these questions act as very scoring question where we cannot afford to miss out even a single mark, my dear friends, because they are extremely scoring, which we can't miss out at any cost. And I strongly believe that this question is making sense for everybody, sir. Brilliant. So I'm sure, my dear friends, that these questions, whatever we're discussing, is actually giving you great sense of clarity. Because generally how do students revise is basically chapter by chapter they start doing revision. But this way, when you look at your past exam question, your revision is on next level with higher efficiency, which definitely makes a big difference. Come on, next. Moving forward, see now, 14th question. Mr. Z, a supplier registered in Hyderabad, Telangana, procures some goods from China. Very good. He is procuring from where? China. He is procuring from China and directly supplies the same to a customer in US. Fantastic. So the goods are going directly from China to US without even coming into India. With reference to the GST law, examine whether said activity of supply of goods by Z to customer in US is taxable under GST. If yes, determine place of supply of the same. First of all, what I will tell you here is that, come on, listen. First of all, what I will tell you is that there is one section called Section 7(2)(a), read with something called Schedule 3. I repeat one more time, there is something called Section 7(2)(a), read with Schedule 3, which clearly talks about something interesting known as transactions which are neither regarded as supply of goods nor regarded as supply of service. Come on, my dear friends, what is the language I am telling? Transactions which are neither regarded as supply of goods nor regarded as supply of service. So it is neither regarded as supply of goods nor supply of service. That very clearly means GST will not apply. In that, one beautiful point which says is that supply of goods from a non-taxable territory, supply of goods from a non-taxable territory to another person in non-taxable territory without goods entering into India. Come on, my dear friends, what is the language? Supply of goods from a non-taxable territory to another place in non-taxable territory without goods entering into India is neither regarded as supply of goods nor regarded as supply of service. Getting clarity, friends? Speak out, sir. Fantastic. Very interesting and wonderful point. See now. Second bit. Priyank of Pune, Maharashtra enters into an agreement to sell goods to Gst of Bareilly, Uttar Pradesh. While the goods were packed in Pune godown of Priyank, Gst got an order from Sahil of Shimoga, Karnataka for the said goods. Gst agreed to supply the said goods to Sahil and asked Priyank to deliver the goods to Sahil at Shimoga. You are required to determine place of supply in the above situation. Very, very interesting question actually. Why very interesting? Let me very clearly tell you, sir. Sir, if you observe very clearly, there are three parties involved here. Who are the three parties? Number one, Gst. Number one is what, my dear friends? Gst. Then number one is Gst. Number two is Priyank, and finally Gst Priyank, and the third person is Mr. Sahil. Exactly. Third person is Mr. Sahil. Sir, if you observe carefully, originally what has happened is that Gst contacted Priyank and ordered goods. And when Gst contacted Priyank and ordered goods, he told Priyank, don't send the goods to me, directly deliver the goods to whom, my dear friends? Sahil. Directly deliver the goods to Sahil. That is what? Who told to whom? Gst has told to Priyank. Strictly speaking, Priyank doesn't know who Sahil is, but Priyank delivered the goods to Sahil only on the instructions of Gst, which is technically called as build to ship to model. And the reason we call this as build to ship to model is because if you observe, Priyank will raise invoice on Gst. That is, goods are billed to Gst, but the goods are delivered to or goods are shipped to Sahil. That is why it is technically called as build to ship to model. Billed to one person, shipped to another person. So Priyank has billed to Gst and shipped to Sahil. That is why it is called as build to ship to model. So one interesting point is that this provision is dealt by one wonderful section called Section 10(1)(b). And moreover, one interesting concept I'll tell you here. Sir, if you observe, Priyank, when he raised invoice, he'll raise invoice on whose name? He'll raise invoice on Gst name. But the goods are delivered to whom? Sahil. That is why it is called build to ship to model. But I'll ask you one more question, sir. Here here Sahil, he also requires invoice or not? Yes. Sahil also definitely wants a copy of invoice. But the fact is very clear that Sahil cannot demand invoice from Priyank. Now, whom will Sahil ask invoice? Sahil will definitely ask invoice from Gst, because Sahil doesn't know who is Priyank and Priyank doesn't know who is Sahil. So Sahil will definitely ask invoice from Gst. So for that invoice from Gst to Sahil, we apply one more section also. In other words, 10(1)(b) will apply for invoice to be given by Priyank and we'll also apply section 10(1)(a) for invoice. I'll repeat one more time. We'll also apply 10(1)(a) for invoice to be given by BIST. So logical point is very clear, my dear friends, here that 10(1)(b), 10(1)(a) both are coming, because if you observe, Priyank also should give invoice, BIST also should give invoice. Priyank will give an invoice to BIST, but goods are delivered to Sahil. And second case is that BIST will directly raise invoice on Sahil, obviously because Sahil doesn't know who is Priyank and Priyank doesn't know who is Sahil, and Sahil will definitely demand invoice from BIST only. Getting clarity, friends? Speak out. Come on, my dear friends. In this context, some interesting important point which I want to tell you very clearly is something like this. Listen very carefully, sir. 10(1)(b) and 10(1)(a) both are being applied because 10(1)(a) provisions talk about bill to ship to model, which clearly says if the goods are invoiced to one person but shipped to another person, then we technically call it as bill to ship to model. And for that bill to ship to model, we'll apply the provisions of section 10(1)(b). And 10(1)(a) applies in case where there is a movement of goods. In case where there is movement of goods in general. But 10(1)(b) will come only in special case where there is a bill to ship to model. Otherwise, we always say that where goods are supplied to a recipient, where goods are supplied to a recipient, where goods are supplied to a recipient on the instructions of third person. When the goods are supplied to the recipient on the instructions of a third person, then only we'll apply 10(1)(b). That means very clearly that if one person supplied goods to another person on the instructions of some other person, then only 10(1)(b) will come. If you observe here, Priyank supplied goods to Sahil only on the instructions of BIST. That is why for invoice of Priyank, we'll apply provisions of section 10(1)(b). Getting full clarity, friends? So if I have to list down the states where they belong to, Priyank belong to Maharashtra, BIST is in UP and Sahil is in Karnataka. Let me write that now. Come on. Priyank belong to where? Maharashtra. BIST belongs to UP. Sahil belongs to where, my dear friends? Karnataka. Now let me tell you very clearly, as per section 10(1)(b), I repeat one more time, as per section 10(1)(b), which talks about when goods are supplied by a supplier to a recipient on the instructions of the third person, then the place of supply will be principal place of business of such third person. Otherwise, in this case, place of supply will definitely be UP. That means very clearly that even though Priyank has delivered the goods, even though Priyank has shipped the goods to Karnataka, it is deemed that BIST of UP has received the goods, and the place of supply will be what, my dear friends? Place of supply will definitely be UP, because 10(1)(b) clearly says in case where goods are supplied by a person to a recipient on the instructions of the third person, then the place of supply will be principal place of business of such third person. That is why in this particular case the answer is straight away UP, my dear friends. But whereas in case of 10(1)(a), when we talk about place of supply, that is for invoice to be given by BIST, 10(1)(a) talks about place of supply in case where there is movement of goods shall be the place where movement of goods terminates for delivery to the recipient. I repeat one more time. Place of supply in case where there is movement of goods shall be the place where movement of goods terminates. Movement of goods, what, my dear friends? Terminates for delivery to the recipient. So in this particular case, the important part to be noted is that place of supply will definitely be Karnataka. So when question like this come in the exam, you have to realize that there are two transactions involved. Don't just write about one point. If you just write about one point, only half marks will come. So it is very important that you write about both the points. Only then you get your full scores. Are we getting full clarity, my dear friends? Speak out. It's a very, very interesting and fantastic question actually. And I strongly believe that we guys have got some good clarity on this question. Done? Fantastic. I'll move forward. Going back, we are done with question number 14. Now let's talk about question number 15, my dear friends. Yeah, question number 15. discuss the liability to pay tax in the case of amalgamation or merger under section 87. Very good. So let me tell you, in section 87 we have a concept of amalgamation or merger, which clearly says that when two or more companies are amalgamated or merged, and the effective date of order is prior to the date of merger. I mean to say, effective date of order is different and actual date of order is different. Then in that case, for that period, they are deemed to be distinct entities. Now what does that mean? Let me give an example here. So let's say there is a company called A Limited and there is also another company called B Limited. This A Limited, B Limited, these two companies are going for merger, and I'm sure you guys know very clearly that whenever we talk about merger, we require something called approval. Whenever we talk about merger, we definitely require approval of court or tribunal. Come on friends, so when there are two companies called A Limited and B Limited and those two companies are going for merger, this merger definitely requires the approval of court or tribunal. And in this context, one interesting point to be noted very clearly is that when these guys go together for merger, they require approval of court or tribunal. Now let's say merger happened on 1/1/2020. Now the point to be understood is that court passed order on 1/3/2020 stating that court passed order, I repeat one more time, court passed order on which date? Court passed order on 1/3/2020 stating that merger is with effect from 1/1/2020. So if you observe carefully, what is the actual date of merger? Actual date of merger is nothing but 1/1/2020, but they require court approval or tribunal approval, and court passed order on which date, my dear friends? Court gave approval on 1st March 2020, stating that merger is with effect from 1/1/2020. Now the point is that, let's say on 15th January 2020, on 15th January 2020, if there is a transaction between A Limited and B Limited, I repeat one more time, on 15 January 2020, if there is a transaction between A Limited and B Limited, then it is taxable in the hands of respective companies. It is taxable in the hands of what, my dear friends? Respective companies. So net effect, what we are trying to tell is that whenever court passed order, the effective date of merger is prior to the order of court. So what law told very clearly is that for the period between, I repeat one more time, for the period between effective date of merger, and the order of court, for the period between effective date of merger and the order of court, they are treated as separate entities. They are treated as what entities, my dear friends? Separate entities. I repeat one more time, for the period between, come on my dear friends, please listen, for the period between effective date of merger, and the order of court, for that period, they are treated as separate entities and they are liable to pay tax respectively. Getting clarity, friends? That's all. These points you write in the exam, you will get your marks. And they're talking about something called liability to pay tax in the case of amalgamation or merger under section 87. And I strongly believe that we have got good clarity on this point. Clear? So like this, some theory questions also will come in the exam. You need to write them also very properly. Make sense? Next. Come on now, let's look at question number what? 16. Look at that now. Examine whether suppliers are eligible for, I repeat one more time, examine whether suppliers are eligible for composition scheme. Very interesting. Come on. Composition scheme dealt by which section? I hope you know that it is dealt by one wonderful section called section 10. Very, very important concept. wherein generally three kind of category of persons go for composition scheme. One, manufacturers. Second, traders. Third, restaurant or catering service provider. Only these guys only go for composition scheme. Others cannot go for composition scheme. And moreover, we can go for composition scheme only when aggregate turnover in the preceding financial year does not exceed 1.5 crores. I hope you know that. Chalo, let's see. In the following independent cases, is there any other option available for concessional tax payment with any of these suppliers? There is something called, my dear friends, if you would have heard, there is something called notification number 2/2019 dated 7th March 2019, which clearly talks about something called if any person who is not eligible to opt for composition scheme and whose aggregate turnover does not exceed 50 lakhs in the preceding financial year can happily opt for this notification and pay tax at the rate of 3% plus 3%. Shiva Teja, let's say Shiva Teja, a chartered accountant, and assume for a second my aggregate turnover in the preceding financial year does not exceed 50 lakhs. Assume for a second my aggregate turnover in the preceding financial year does not exceed 50 lakhs. Then current year I can actually opt for this notification and I can pay tax at the rate of 3% plus 3%. But the point to be noted is that Shiva Teja, being a chartered accountant, I cannot go for a composition scheme because law always says that service providers cannot go for composition scheme. Who generally can go for composition scheme is only a manufacturer, second a trader, third restaurant or catering service provider. Come on, see the questions. Devlok, a registered dealer, is dealing in intra-state trading of electronic appliances in Jaipur, Rajasthan. It has turnover of 130 lakhs in the preceding financial year. In the current year, it has also started providing repairing services of electronic appliances. Definitely, my dear friends, they can 100% opt for a composition scheme. But one important point to be noted is very clearly, my dear friends, that since aggregate turnover does not exceed 1.5 crores in the preceding financial year, current year, Devlok can opt for composition scheme. However, when he wants to provide some other service, law told one important point. When a person who is under a composition scheme, he wants to provide some other service other than restaurant. I repeat one more time, a composition service provider, he wants to provide some other service other than restaurant. He can provide, but the value of that service can maximum be 10% of turnover of the state in the preceding financial year or 5 lakhs, whichever is higher. So tell me, what is turnover of last year? Turnover in state, 130 lakhs. Of that 10% is how much? 13 lakhs. So you can do 13 lakhs or 5 lakhs, whichever is higher. That means you can provide a repairing service only up to a value of 13 lakh rupees. And you can still continue to be under a composition scheme. Getting clarity, guys? Good. Second bit. Narayan and Sons. Come on, what is that language? Narayan and Sons are registered. What, my dear friends? Narayan and Sons, a registered dealer, is running a Khana Khazana restaurant. Very good. Near City Palace in Jaipur. It has turnover of 140 lakhs in the preceding financial year. In the current financial year, it has also started dealing in intrastate trading of beverages. No problem. Definitely they can opt for composition scheme because aggregate turnover during preceding financial year does not exceed 1.5 crores. They can happily opt for composition scheme. And moreover, we all know that who can opt for composition scheme? Either a manufacturer or a trader or a restaurant and catering. So here there is no problem at all. Narayan and Sons can happily go for composition scheme. Next, third bit. See now, Indra and Bro, a registered dealer, is providing restaurant services in what, my dear friends? Uttarakhand. Very good. It has turnover of 70 lakhs in the preceding financial year. Let me tell you one important point, my dear friends. One point, let me clearly tell you that in Uttarakhand, the limit is not 1.5 crores. The limit is only 75 lakhs. Some states, the limit is not 1.5 crore. Some states, the limit is only 75 lakhs. So here, turnover is how much, sir? 70 lakhs in the preceding financial year. It has started providing interior intrastate interior designing services in the current financial year and discontinued rendering restaurant services. Oh, sir, one point. If any person is engaged in supply of service other than restaurant, then they cannot opt for composition scheme, sir. Here, straight away my answer is no composition scheme. Of course, one point is there very clearly that if you are a manufacturer or a trader or a restaurant catering person, then you can provide some other service up to a value of 10% of turnover in state in the preceding financial year or 5 lakhs, whichever is higher. That benefit is always there in the law. But if you are just providing some other service other than restaurant, you cannot take composition scheme. And moreover, since aggregate turnover in the preceding financial year is 70 lakhs, he cannot go for that notification also. Because if he has to go for notification, aggregate turnover during preceding financial year should not exceed 50 lakhs. But here it is 70 lakhs. So he cannot go for that notification. I am sure these points are making sense for you. Fantastic. Next, Naresh, a registered dealer, is exclusively providing intrastate architect services. If it is pure architect, obviously no composition scheme, but it has turnover of 40 lakhs only in the preceding financial year. If it is 40 lakhs only, then this particular person, Naresh, he can go for notification number 2/2019 dated 7th March 2019. And he can just pay tax at the rate of 3% plus 3%. That's it. So he can opt for notification. So this particular person, he can opt for what, my dear friends? Notification and pay tax at the rate of 3% plus 3%. That's it. And in case of Indra and Bro, we told no, because their aggregate turnover in the preceding financial year is more than 50 lakhs. But Naresh, we told yes, because aggregate turnover during preceding financial year does not exceed 50 lakhs. I strongly believe that we are getting full clarity on this point. Speak out, my dear friends. Getting clarity, sir? Fantastic. Next, let me look at now question number 18, my dear friends. That was an interesting question what we had done on composition scheme. I strongly believe that we got full clarity. Let me look at 17th question now. Element Private Limited Coimbatore exclusively manufactures and sells product X, which is exempt from GST. Very good. If you are dealing purely in exempt supply, there is no need to obtain registration also, because of a great section called section 23. See now, the company sells X only within Tamil Nadu. Very good. Turnover of the company in the previous year was 45 lakhs. Company expects the sales to grow by 30% in the current year. Fantastic. Company purchased additional machinery for manufacturing X on 1st July. Purchase price of capital goods was 30 lakhs, exclusive of GST 18%. Very good. However, with effect from 1st November, exemption available to X was withdrawn by central government. Very good. And GST was imposed. The turnover for the half year ended 30th September was 45 lakhs. First bit what they asked is that, see now, examine the above scenario and advise Element Private Limited whether it needs to get registered under GST. Straight away, my dear friends, for this point my answer will be yes. But one point, let me very clearly tell you, in exam you can't throw the answer like that. What you have to write is that, as per section 23, if any person is engaged exclusively in exempt supplies, he is not liable to be registered. Clear, my dear friends? But however, if you observe very clearly, with effect from 1/11, the exemption is withdrawn. So what he has to do now, within 30 days, with effect from 1/11, he should definitely obtain what, my dear friends? He should definitely apply for registration. Getting clarity, friends? And if you observe very clearly, he is in Coimbatore. Coimbatore is nothing but Tamil Nadu, and Tamil Nadu generally the limit is 40 lakhs. If you are engaged exclusively in goods, the limit is 40 lakhs, and already we touched 45 lakhs. So definitely registration is required. And with effect from 1/11, you have to apply for registration within 30 days. And of course, we have got one form called GST REG 01. In that form, we'll apply, my dear friends. Next, B bit. If the answer to the above question is what, my dear friends? Affirmative. Advice, what, my dear friends? LMN Private Limited, whether it can avail input tax credit on the additional machinery purchased exclusively for manufacturing X. For this question, my answer is no, because I will apply provisions of one wonderful section called section 18(1)(a). Sir, in input tax credit chapter, we have got one very good section called section 18, which talks about availability of credit in special circumstances, which clearly says in 18(1)(a), it talks about any person who is liable to be registered. If he applies for registration within 30 days, then he can claim some great benefit of input tax credit on the stock what he has. And what is the benefit he will take? He can claim ITC on inputs held in stock, inputs contained in semi-finished goods, and inputs contained in finished goods in stock, provided he applies for registration within 30 days. They generally file one form called ITC 01. In that form, they'll declare the details of that stock and happily take input tax credit on the stock preceding the effective date of registration. And let me very clearly tell you that credit is allowed only on inputs held in stock, inputs contained in semi-finished or finished goods in stock. But in this particular case, the additional machinery is nothing but a capital good. So that is the reason why he cannot take that credit, because 18(1)(a) gives benefit of taking that credit only for inputs, but not for capital goods. We can take benefit like that only for what, my dear friends? Inputs. And when I say inputs, it talks about inputs held in stock, inputs contained in semi-finished, or inputs contained in finished goods in stock. Getting clarity, friends? Speak out, sir. So that's the reason why in this particular case, straight away my answer will be no. Fantastic. Next, can I proceed? Good. That's the end of story for question number 17, my dear friends. Now, let me start looking at question number 18. Mahadev Enterprises, a sole proprietorship firm, opened a shopping complex dealing in supply of goods at multiple locations, Himachal Pradesh, Uttarakhand, Tripura, in the month of June. It has furnished the following details relating to the sale made, relating to what, sir? Sale made at such multiple locations for the month of June. See now, intra-state sale details are given, an intra-state sale of exempted goods is given, interest received from banks on the fixed deposit, that is also given, and intra-state sale of non-taxable goods, that is also given. See below. With the help of above mentioned information, answer the following questions giving reasons. What the first bit they asked? Determine whether Mahadev is liable to be registered under GST law. So let me tell you one point. Here we are dealing only in goods. Correct or not? And we are in Himachal Pradesh, Uttarakhand and Tripura. Correct or not? So Tripura, there is something called Manipur, Mizoram, Nagaland, Tripura. These four are called as special category states for the purpose of registration. And if you have got business there, then registration is mandatory. I mean to say, if you have got taxable supplies in special category states, then registration is mandatory if aggregate turnover exceeds 10 lakhs. And let me very clearly tell you, this word aggregate turnover is defined by one beautiful section called, section 2(6), which clearly says aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies and exports on all India basis under same PAN. Come on, my dear friends. Which section defines aggregate turnover? Section 2(6) defines what is an aggregate turnover, which clearly says aggregate turnover covers all taxable supplies, exempt supplies. Aggregate turnover covers what, my dear friends? All taxable supplies, exempt supplies. Next, they also cover something called interstate supplies. Finally, last one, exports. Chalo guys, come on. Aggregate turnover is defined by one wonderful section called 2.6, which clearly says aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies and exports on all India basis. On what basis, guys? All India basis under same PAN. Come on guys, all India basis under what PAN, my dear friends? Same PAN. So friends, let me repeat one more time. Aggregate turnover covers all taxable supplies, exempt supplies, interstate supplies and exports on all India basis under what PAN, my dear friends? Same PAN. So we need to aggregate all these turnovers in order to calculate aggregate turnover. So if you observe very clearly, what is the total of Himachal Pradesh? Taxable is also considered, exempt also considered, and let me tell you, interest received from banks on the fixed deposit, this is also exempt, and it is exempt, that is also considered as a part of aggregate turnover. Non-taxable, that is also considered as a part of exempt turnover, that is also considered as a part of aggregate turnover, because aggregate turnover covers all taxable, exempt, interstate, exports on all India basis under same PAN. So friends, what is the total of Himachal Pradesh? Himachal Pradesh total is 22,50,000 and Uttarakhand total is 21 lakhs and Tripura 7 lakhs, 6 lakhs, 13 lakhs, 13, 60 and 40, it comes to 14 lakhs. And let me tell you very clearly, whenever we have got some taxable supplies, in special category states, then registration is mandatory if aggregate turnover is more than 10 lakhs. And here aggregate turnover is definitely more than 10 lakhs because we will see on all India basis. Getting clarity, friends? And since aggregate turnover is more than 10 lakhs on all India basis, registration is definitely required. So first bit, determine whether Mahadev Enterprise is liable to be registered. 100% answer is yes. And what is the threshold limit? Threshold limit is nothing but 10 lakhs. Because whenever you have got taxable supplies in special category states, that is Manipur, Mizoram, Nagaland, Tripura, then registration is required if aggregate turnover is more than 10 lakhs. Next point. Explain with reasons whether your answer in one will change in the following independent cases. Wow. See now. First, if Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh. So let me tell you, when he is dealing in taxable supply of goods only from Himachal Pradesh, then the aggregate turnover limit will definitely not fall to 10 lakhs because aggregate turnover limit will fall to 10 lakhs only if there are taxable supplies in special category states. Getting clarity, friends? If not, the limit will be 20 lakhs. But if you are exclusively engaged in supply of goods, then the limit will become 40 lakhs, my dear friends. 40 lakhs it will become. It will become what, my dear friends? 40 lakhs. And if you observe, if it becomes 40 lakhs, the interesting point to be noted is that registration is not required. Since aggregate turnover does not exceed 40 lakhs, because when you are engaged exclusively in supply of goods, then the limit is, my dear friends, 40 lakhs, sir. I hope we are getting clarity, my dear friends. Of course, in some states the limit is 20 lakhs only, like Arunachal Pradesh, Meghalaya, Sikkim, Uttarakhand, Puducherry and Telangana, the limit is 20 lakhs only. But all the states, the limit is 40 lakhs. And 40 lakhs story will come if you are engaged exclusively in supply of goods. If you have got service, the limit is 20 lakhs. If you have got goods, service both, then again the limit is 20 lakhs only. Clear, my dear friends? Speak out, sit down. If Mahadev Enterprises is dealing in taxable supply of goods and services only from Himachal Pradesh. Now an interesting point is that, very clearly let me tell you, I just told you the answer to 1 minute back. This story of 40 lakhs limit will apply only when you are engaged exclusively in supply of goods. If it is only service, then limit is 20 lakhs. If it is goods and service both, again the limit is 20 lakhs only. That means what will happen here? Registration is required. Since aggregate turnover, since what, my dear friends? Aggregate turnover is more than 20 lakhs. I hope we are getting clarity because the figure is 22.50. Speak out, sir. I strongly believe that we are getting clarity. Next, last bit. If Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh and has also affected interstate supply of taxable goods amounting to 4 lakhs, then my dear friends, without any second thought, registration is required. And I will tell registration is required. This answer is because of one beautiful section called 24. 24 talks about something called compulsory registration. In that first point very clearly says, if any person is engaged in interstate taxable supply of goods, if any person is engaged in interstate taxable supply of goods, then registration becomes mandatory. Without any second thought, registration becomes mandatory. Very, very interesting point. I'm sure we are clear with this. Speak out. Everybody, sir. Fantastic. Next question. Come on, moving forward. Let's look at question number what, my dear friends? 19. So if you observe one point very clearly is that whenever a question paper is coming in ICAI exam, they are asking question from all different chapters. They are covering time of supply, value of supply, place of supply, input tax credit, registration, appeals, what not. Different topics they cover and ask for 2 marks, 4 marks, 6 marks, 8 marks, multiple choice questions, different way they ask, so that they holistically give a question paper covering all the aspects for you. Makes sense, right? Come on, see now. Question number 19. Diligent Force, a professional training institute, gets its training material of aptitude quotient printed from Durga Printing House, a printing press. Content of the material is provided by Diligent Force, who owns the usage rights of the same, while the physical inputs, including the paper used for printing, belongs to Durga Printing House. Very good. Ascertain whether supply of training material by Durga Printing House constitutes supply of goods or supply of service. Very practical point. So practically also, my dear friends, whenever we miss out some class or miss out some session, what we generally do is that we take our friend's notes, go to a Xerox center and take a photocopy of that. When we take a photocopy, we don't carry white papers along with us. We just get the photocopy done. And that man will tell, come on, pay 2 rupees per page. When we are paying that 2 rupees, that 2 rupees is not just for the service what he is giving, that is also for the paper what he gave to us. Because we are not carrying white papers with us. Now one point is that whenever there is more than one thing coming, we call it as principal supply or composite supply. And let me tell you very clearly, principal supply is that supply where 2 or more taxable supplies are naturally bundled and one of which is a principal supply. Getting clarity, friends? Composite supply is that supply. I repeat one more time. There are 2 types of supply called composite supply and mixed supply. Composite supply is that supply where 2 or more supplies are naturally bundled and one of which is a principal supply. Clear, my dear friends? And in this particular case, it is important to know what is principal supply. Is it goods or service? And let me very clearly tell you, essentially the principal supply is supply of service and not supply of goods. Obviously, for a simple fact and reason that the predominant element what they are giving is nothing but service, but not the goods. Are we getting clarity, friends? I repeat one more time. Predominant element what they are giving to us is nothing but service, but not the goods. So predominant element will change based on the facts and circumstance of each case. But in this particular case, predominant element is very clearly service. The goods is only ancillary. Clear, friends? But one thing you have to understand is that, let's say for a second, one more small example I will give you. Let's say for a second, Shiva Teja goes to one cloth store. Shiva Teja goes to one cloth store and I buy one shirt. When I buy one shirt, at the end of the shopping, I told the shirt size is slightly different. I want some alteration to be done. So for that shirt, they are given alteration service also. So I got 2 things. 1, shirt. 2nd, alteration. In that, what is the predominant element, sir? Predominant element is nothing but goods. But in this particular case, when we go and take the printing service, the predominant element is service, but not the goods. So supply of training material by Durga Printing House would amount to supply of service, but not supply of goods. I strongly believe that we got full clarity on this question, my dear friends. Speak out. Fantastic. Then, next, come on. Let's look at question number what, my dear friends? 20. Sit down. In an order dated 20th August issued to GH Private Limited, Joint Commissioner of CGST has confirmed CGST demand of 280 crores. Fantastic. Company is disputing the entire demand of CGST and wants to know how much pre-deposit it has to make under CGST Act for filing an appeal before Appellate Authority. Very good. Against the order of Joint Commissioner. Next line. Assuming that Appellate Authority also confirms the order of Joint Commissioner and company wants to file appeal before Appellate Tribunal against the order of Appellate Authority, how much pre-deposit it has to make? Very good question. Friends, let me tell you, just a second. Let me tell you, for this wonderful question what they asked, they are basically asking about the pre-deposit what we have to pay. They are asking basically about the pre-deposit what we have to pay. Getting clarity, friends? Just a second. Yeah. So they're basically asking about what, my dear friends? Pre-deposit what we have to pay. Correct or not? 280 crores is the total demand, and they're asking about what is the pre-deposit we have to pay when we file appeal before Appellate Authority and then before Appellate Tribunal. Now in this context, my dear friends, let me very clearly tell you the answer, sir. When we talk about Appellate Authority, when we talk about what, my dear friends? Appellate Authority, what we have to pay as pre-deposit is nothing but 10% of tax in dispute. Generally, what we pay is 100% of admitted dues, 100% of what's a admitted dues plus 10% of remaining tax in dispute. And here we are assuming that entire tax is in dispute. So which comes to 10% of 280 crores, which comes to 28 crores. But still, we'll restrict this figure to 25 crores because they clearly told that we are required to pay pre-deposit of 10% of disputed tax subject to a maximum of 25 crores. Subject to maximum, how much, my dear friends? 25 crores. Getting clarity? Exactly. Other side, when we talk about Appellate Tribunal, come on, when we talk about Appellate Tribunal, we are again required to pay a pre-deposit of 20% of remaining tax in disputes. And let me tell you very clearly, you can't afford to tell, I already paid 10%, now I'll pay again more 10%. You can't tell like that. Because when I say 20%, this 20% is in addition to 10% what we already paid. Getting clarity, friends? I repeat one more time, this 20% is in addition to 10% what we already paid, my dear friends. So what is 20% of remaining tax and dispute? Again, we'll calculate 20% of 280 crores, which comes to 56 crores. And let me tell you, 56 crores is restricted to maximum 50 crores. Because under Appellate Authority, they told it is 10% of tax and dispute subject to maximum of 25 crores. And in Appellate Tribunal, they told 20% of remaining tax and dispute subject to maximum of 50 crores. Are we getting clarity, sir? This is the story of the pre-deposit what we have to pay when we go for appeal to Appellate Tribunal and appeal to Appellate Authority. And this is only as per CGST Act. I strongly believe that we are getting full clarity on this point. Speak out, my dear friends. Everybody, sir? Are we getting clarity, all of us? Fantastic. Come on, next see. Come on, now let me look at question number 21, my dear friends. Come on, see now. With reference to provisions of section 17, what is section 17, my dear friends? 17 talks about something called apportionment of credit and block credits. See now, examine the availability of input tax credit under CGST Act. When we talk about input tax credit, that means we're talking about section 17(5), block credit. See now, MDF Limited, an automobile company, has availed works contract service for construction of a foundation on which machinery to be used in production process to be mounted permanently. 101%, my dear friends, I'll tell the word ITC is allowed. I'll tell the reason also why ITC is allowed. Other words, this is not blocked under section 17, subsection 5, clause C. In fact, my dear friends, we have got something called block credit is there under 17(5) clause C, which deals with works contract services in relation to construction of an immovable property. Credit is blocked, otherwise credit is not allowed. However, credit is allowed in two cases. Now, what are the two cases where we can take credit? Number one, input works contract service taken for providing output works contract service, credit is allowed. Second, works contract service taken for construction of plant and machinery, credit is allowed. And law has defined what is plant and machinery, which clearly says that plant and machinery means any equipment or apparatus or any machine fixed to the earth, either by foundation or structural support, and includes such foundation or structural support, but does not include three things: land, buildings, civil structure. Number two, telecommunication towers. Number three, pipelines laid outside the factory. Number one is what's that? Land, buildings, civil structure. Number two, telecommunication towers. Number three, pipelines laid outside the factory. These three are technically not covered in definition of plant and machinery. And we can claim input tax credit on works contract service related to plant and machinery. And let me very clearly tell you that plant and machinery clearly covers any machine or equipment or apparatus fixed to earth, either by foundation or structural support, and includes such foundation structural support. So in this particular case, 100% credit is allowed. Next, Shah and Constructions procured cement, paint, iron rods and services of architects and interior designer for construction of commercial complex for one of its clients. So straight away, my dear friends, ITC is allowed. That is, it is not blocked under section 17(5) clause D. So 17(5) clause C talks about works contract service taken for construction of immovable property, whereas 17(5) clause D talks about any goods or services or both taken for construction of immovable property on own account. Immovable property on what account, my dear friends? Own account. So if it is on his own account, then credit is not allowed. Here if you observe, Shah and Construction has procured cement, paint, iron rods and architect service, interior designing service, not for own account. Not for what, sir? Own account. They have procured it for some other person and not on own account. Getting clarity, friends? So definitely credit is allowed. I strongly believe that we are getting full clarity on this point. Speak out. Shall finally, third point. ABC Limited availed maintenance and repair services from Jaggi Motors for a truck used for transporting his finished goods. 100%, my dear friends, ITC is allowed. This is also not a block credit, because let me very clearly tell you, sir, in section 17(5), first point is 17(5) clause A, which talks about credit is not allowed for motor vehicle used for, otherwise motor vehicle for transportation of passenger having seating capacity not exceeding 13%. So if the seating capacity is more than 13, then credit is allowed. But that is talking only about passengers. If any truck or any vehicle is used for transportation of goods, then definitely credit is allowed on purchase of that vehicle. And moreover, credit is also allowed on repairs and maintenance related to that vehicle. So when you can take credit on vehicle, you can also take credit on repairs and maintenance. I repeat one more time, when you can take credit on vehicle, you can also take credit on repairs and maintenance. I strongly believe that we got full clarity on this point. That's it. That is the story of 21st question, my dear friends. I strongly believe we are clear, sir. That's it. Moving forward, my dear friends, to question number 22, sir. And let me tell you, question number 22 deals with the concept of what, my dear friends? It deals with customs. See now, FOB price. What is FOB? Free on board. And the question they are asking, compute something called export duty. Generally in exam, 99% they'll ask questions on import duty only. But sometimes they might also ask questions on export duty also. See now, FOB price. And generally, my dear friends, in case of imports, the assessable value is always CIF, that is cost, insurance and freight. Whereas when it comes to exports, the assessable value is always FOB, and FOB stands for free on board. See now, shipping bill presented electronically on 26th April. Proper officer passed order permitting clearance for loading of goods for export, technically called as lead export order. What order? Lead export order on 6th May. And the rate of exchange figures they gave, rate of duty also they gave. Rate of exchange is notified for export by CBIC, which stands for Central Board of Indirect Taxes and Customs. Now one point let me tell you, sir. Exchange rate we will always consider on the date of filing shipping bill. Now when is shipping bill date? 26th April. That is nothing but 70 rupees. That is what we will take into account. But when we talk about rate of duty, we have got one section called Section 16 of Customs Act, which clearly says that when you want rate of duty in relation to exports, see the rate on the date on which PO has granted clearance, technically called as lead export order. See the rate on the date. See the rate on the date on which PO has granted clearance, technically called as lead export order. Come on, my dear friends. On that date, what is the rate, sir? On that date, the rate is 8%. So what is the answer then? $50,000 into 70 rupees into 8%. That becomes my customs duty payable. Now see, $50,000 into 70 into 8%. It comes to 2,80,000. But in exam, please don't throw the answer. Please present properly. And very clearly write down that for the purpose of exchange rate is considered on the date of filing shipping bill. Whereas as per section 16, the rate of duty is considered on the date on which proper officer has granted clearance, technically called as lead export order. In short, we always call it as LEO. Clear? That's it. A small question which actually makes some sense also. And I strongly believe that we are clear with this, my dear friends. Speak out. Good. Next. Question number 23, sir. See that? See that question. Come on. Answer the following question with reference to provisions of duty credit scrips under export from India scheme. You would have heard something called SCIS and MEIS. Merchandise export from India scheme and service export from India scheme. Based on the exports what you do, for service they told individuals more than $10,000, other than individuals more than $15,000, you should get net foreign exchange to India. And based on the exports what you do, you get something called scrips. And the scrips can be sold in the market or the scrips can be used for payment of customs duty. Very interesting concept and very practical too. See now. Neha provides services eligible for SCIS, service export from India scheme. She wants to sell the scrips earned by her. Can you do so? 100% answer is yes. The scrips are always freely transferable. Scrips are freely, what my dear friends? Transferable. No doubt about it. Happily you can sell. Getting clarity, friends? All of us? Next. Can a manufacturer, instead of importing the inputs, source the same indigenously? I repeat one more time. Can the manufacturer, instead of importing the inputs, source the same indigenously without payment of GST? 100% answer is no. Because whatever scrip you get, you can use it only when you do imports. Otherwise, for payment of your basic customs duty or import IGST. But you really can't use this for payment of your domestic procurement. You generally use the scripts only for payment of basic customs duty. Getting clarity, friends? Generally we use the scripts only for payment of basic customs duty. I strongly believe you are getting clarity. Clear? No utilization of script. Utilization of script for payment of domestic GST is not allowed. You can use that script only for payment of customs duty, my dear friends, but we really can't use it for payment of what, my dear friends? Domestic GST. I strongly believe you are getting clarity. Next point. An exporter was issued a duty credit script dated 15th July. What is the period within which he must utilize the script? Let me very clearly tell you, any duty credit script what they get will be valid for 18 months from date of issue. In other words, script is valid. Script is valid for 18 months from date of issue. I repeat one more time, script is valid for how long, my dear friends? 18 months from date of issue. Clear? Chalo, finally last bit, fourth bit. An exporter, see come on. An exporter exported leather footwear through courier. Exporter exported leather footwear through what, my dear friends? Courier. He exported leather footwear through courier using e-commerce of value of 24,000. Can he apply for duty credit script? 100% answer is yes. 100% answer is yes. He can apply up to a FOB value of 5 lakh rupees, sir. Here this value is only 24,000. So no problem. Export of goods through courier using e-commerce of a FOB value up to 5 lakh rupees per consignment. 5 lakh rupees per consignment is eligible for MEIS. But here the value is only 24,000. So happily you can apply for this scheme. Getting clarity, friends? So like this, one question will come from foreign trade policy for 4 to 6 marks, which will be very scoring in the exam. If you write properly, you will get your full scores. Clear? Everyone? Come on, next point. So finally, let's look at question number what, my dear friends? 24. So please observe very clearly that 75% marks weightage is given for your GST, my dear friends. 25 marks, that is 25 marks is given for customs and foreign trade policy. It's very scoring. I really want everybody who is watching me should make sure that you guys get exemption. Shiva Teja will not talk nothing less than exemption. We want big numbers. Come on, see now. Question number 24. With reference to section 9A, subsection 1A of Customs Tariff Act, mention the ways that constitute circumvention of anti-dumping duty imposed on an article which may warrant action by the central government. So generally, anti-dumping duty is imposed when the goods are dumped into India at a price lesser than their local normal price. That means, for example, let's say one product is there. That product is being sold in China at a value of 1000 rupees INR, assume 1000 INR. But that is being sent to India at a value of 900. That means what? The export price is lesser than their normal price. So they are trying to dump the goods into India. That is why we apply something called dumping margin. But sometimes these people try to play games. People try to play games to avoid anti-dumping duty. And what kind of games they play is technically like what constitute circumvention of anti-dumping duty. The games what they try to play is they'll alter the description, or they'll alter the names, or they import the article in some other form, maybe in disassembled form or unassembled form, or they'll change the country of origin, or they'll do some other activity so as to make sure that government will not identify this. Getting clarity, friends? So in exam, what points you can write? You can write one point as by altering the description or nature of the article. Second point you can write is that changing the country of origin. Change the country of origin. Third point you can write is that importing article in unassembled form. So like this you can write 2-3 points. How people try to avoid levy of anti-dumping duty? Come on friends, how do people try to avoid levy of anti-dumping duty? Number one, altering the description of article. Altering the description of what, my dear friends? Article. First point what I wrote, altering the description of article. Or second point, altering the composition of article. That means you are telling that this article consists of this, but not this. You are trying to change the composition of article so as to avoid anti-dumping duty. Possible, highly possible. Then next possibility is changing the country of origin. Changing the country of what? Origin. Maybe from one country you are sending it to other country, from there you are sending it to India, trying to play games there. Changing the country of what? Origin. Next, importing article. Importing article in unassembled form. Importing article in what form, sir? Unassembled form. So like this you can try to write this. People are trying to play games so as to avoid anti-dumping duty, and majority cases government is catching them. And generally what government do is they conduct inquiry, investigation, and then only they will decide whether anti-dumping duty needs to be imposed or need not be imposed. Chalo. Finally, one last question in customs, and in fact last question in this particular paper. See that. With reference to customs and central excise duty drawback rules, briefly state whether an exporter who has already filed a duty drawback claimed under all industry rate can file an application for fixation of special brand rate. 100% answer is no, my dear friends. Generally, sir, we have got something called section 75, and in that there are some rules also which clearly talks about this drawback rules. In the drawback rules, they clearly told one important point is that at the time when you do export, you please decide whether you want drawback under all industry rate or you want a special brand rate. All industry rate is nothing but government has already fixed for this particular industry, this is the drawback. Like that, they already fixed at drawback percentages. Clear, my dear friends? So prior to export of goods only, you have to decide whether you want to make a claim under all industry rate or special brand rate. That means very clearly what I am trying to tell you is that if exporter has already filed a duty drawback claim under all industry rate, then he cannot request again for special brand rate. That's the point. Very simple. Write 2 lines, you will get your marks. Like this question can come for 2 marks in the exam. This is also very scoring. I strongly believe that we have got full clarity on this point, my dear friends. Speak out. Fantastic. That's it. That is the end of story for this wonderful paper called Rtp November 2019. And I strongly believe that we have got great clarity on this point. So friends, we are done with Rtp May 2020. We are also done with Rtp November 2019. Now let's move forward to discussion about Rtp of May 2019. Are we ready? Chalo, let's start with next paper, my dear friends.
If you like this video, share it with your friends. Subscribe to our YouTube channel to watch more such videos and learn from our expert faculty members. Press the bell icon to get regular notifications whenever we upload a new video. Download NDI mobile app to get complete CA course online. We value your support. Thank you for watching.